All right, guys, we're going to get going. We're going to do stuff, see things, learn stuff. I'm excited about today. I woke up wired, ready to go, feeling good. I hope you guys are too. Um, let's get our first stop out of the way so we can get to the education, guys. Every morning, forexfactory.com/calendar. And the reason we do this is because everything that I teach in this room, and I would say what the majority of you guys do, is just pattern based. It is something that is repeatable, something that you see often, something that you can prove wins more than it loses. And in order for those patterns to be solid, very often there's got to be a lack of psychosis in the market. Can we say it that way? So every morning I come in and I look for high impact, these red boxes. I even look for these medium impact, these orange boxes. And all I do is I say, I'm not going to adjust my trading plan. I'm not going to make decisions based on news. If I see that there's a high impact event, I choose not to trade. I choose not to step in front of that freight train of emotion because bad things tend to happen. So this is my first stop every day as my charts load. And then what we're going to do today, I'm gonna introduce these first because I can. Victor, your short's looking solid. Um, I talk about NinjaTrader in the room, so I've got a lot of you in here that are NinjaTrader users. Maybe you're a NinjaTrader demo. This morning, I'm going to hand you this plan. This is the KISS plan. This is a plan that is designed to optimize your chances of success. It's a stepping stone in your learning journey, guys. This is the one that teaches you to read your indicators. This is the one that gives you a checklist for entry, talks to you about how to manage that trade, even introduces a second trade. But the second trade is very dependent on your understanding of the first trade. I'm also going to give my TradingView users the KISS plan. Hey, what's going on, Bajoy? Good to see you. And this is the exact same thing, but on a different platform. It is a stepping stone. Guys, these trades that I teach in the room are the best of the best, the highest probability, the warm, fuzzy, feeling good, can't wait to pull the trigger trades. These are what set you up to see the rest. These are probably not your get-rich trades, although they could be if you were patient enough. Um, but these are the trades that teach you to shift your brain from speaking in terms of profit and loss and adjusting it to thinking in terms of advantages. And when you abandon the idea that you're in control, when you abandon the idea that you'll ever know what's going to happen with your trade, excuse me, when you let go of the emotional connection, believing that losses are failures, and you just look for advantages and let those advantages become the trade, guys, it takes an enormous amount of stress out of trading. So my job in this room is to teach you to read your indicators, to read your charts, to recognize those advantages. I'm going to hand you those plans that give you the ability to take the advantages and turn those into trades that you can test, that you can prove, that you can validate and verify win more than they lose. So you're going to have checklists, guys. 3 things on the checklist, regardless of which plan you're on. It only takes 2 charts to do what we do. And guys, right now as a brand new user, you're building a foundation. If you're day one, you're learning the language. You're learning to recognize the indicators. You're learning to be able to hear what we're saying and see what it means. And guys, if you're on day one, and I know that I've got at least one of you in here, welcome. It's great to have you. I want you to give yourself just a little bit of grace because day one feels very much like this. Day one is like drinking from a fire hose, guys. And for some of us, day 101 was like drinking from a fire hose because we didn't allow it to be simple. I break things down into the least common denominator. I go with the assumption that you know absolutely nothing, building up from ground zero. Whether that's true or not, it's okay. But I teach you to recognize advantages, and I want you to speak out. I see these advantages, and guys, the advantages become your trade. Chart reading, not trading, chart reading is about 90% of your day. The most successful traders that I work with are the most skilled in doing absolutely nothing. The most successful traders that I work with typically do the exact same thing. There's not a lot of deviation from the plan because the plan has been proven. 10% of your day will actually be trading. So just for reference, if you spend 6 hours sitting in front of your computer today, you're likely to be active maybe 36 minutes, maybe. My average trade time is about 2 minutes, I think. It's quick in, it's quick out, but you're going to understand through your chart reading where the market is likely to continue. This becomes entries likely to go, great targets likely to stop, areas that could terminate a trend, guys. And you're going to use these concepts to enter the market at the point where the market is most likely to continue with the underlying trend. You'll use these concepts to manage your trades, to be able to look into the distance before the market ever reaches a key area and go, wow, if it gets there, that could shut things down. What a great place to take profits. And then finally, this is going to help you embrace the 90%. Because when the market isn't giving you what you need to feel confident, when the market isn't giving you your patterns, your rules met, it's okay to choose to do nothing. And those of you that refuse to surrender that control typically do pretty well. So the trades that you can take, high probability. This is what we talk about in the room. This is the best of the best, guys. This is the one that there should be absolutely nothing holding you back because it's just a pattern that you can prove wins more than it loses. All indicators on all charts will agree with the rules, guys. There is no conflict. Once you understand the high probability trade, it opens the door for the medium probability trade. This is where most of your indicators align, but a small issue exists. Let it be an issue, singular, right? Not a whole bunch of issues. Medium probability will probably be the majority of your trades after you learn the high probability scenario. And then low probability, multiple conflicting signals, reducing the chance of success. It's hard to get excited about taking a trade when I know that my chances of success are already reduced. And you're going to use the 3 advantages that we discuss. And I always start with NinjaTrader because it does translate over. You're going to use the idea of momentum, of a clear path, and of an entry area. And when you can define all 3, and I'm going to give you definitions, you'll be able to say it, see it, do it. It's a high probability trade. And this is a trade on NinjaTrader platform that typically wins 70 to 80% of the time. So you can create confidence through the memory of success, one of my favorite phrases. Now, when one of your advantages go away, you have to say to yourself, I'm now in a medium probability scenario. It's no longer a high probability scenario. It's going to get your management hat on. And then when 2 of them go away, most of you, hopefully, will go, hey, I have to define this as low probability because of the omission of 2 advantages. Why on earth am I risking my money? I'll sit on my hands and I'll wait. And guys, you're in control of the entry. Retain that control. Nobody can make you into the market. If you don't get your criteria met, it's okay to sit out. The next trade is coming. But when you know what's working for you, you know what's working against you, speaking in terms of advantages, it helps you make decisions on whether or not you want to enter that trade, and it also helps you make decisions on how aggressively that you may need to manage it. And now, quick reminder, before we get any further, this is an educational room. This is an informational room, guys. My job is to teach you to read indicators. I will not call trades. I don't give trading advice. That's not what I do. It's not even what I'm allowed to do. So if you want to go through and read this, you're absolutely welcome to. What I'm doing is I'm teaching you to read indicators, to recognize patterns so you can make good decisions. And your decisions are wholly yours because everybody sees things differently. Everybody hears things differently. Everybody does things differently. So I don't play trade police. I don't say you're right or you're wrong. I say you had the advantage or you didn't, guys. And if there's something missing, we'll talk about how to do it better. So we're going to take the first hour and we're going to talk about the rules. Whether it's NinjaTrader or TradingView, we're going to break down the rules. I'm going to show a lot of pictures. I'm going to talk about what they mean, how to identify them. And I will associate language with every look. And I encourage you to do the same. Take a pen, write it on a piece of paper, because there's a very real neurological connection. When you see something and you write it down, it activates different parts of the brain, and it really does increase retention. Everybody in the room has the ability to simulate. Everybody in the room has the ability to practice, guys. Your simulator is like going to the driving range. You can't triple bogey. It's like going to the batting cages. You can't strike out. Simulator is where you have to be willing to make mistakes, where you have to be willing to F it all up, and then post in the room. Post your mistakes, post your challenges, post your losses, and post your winners. Guys, I want you to brag. But the losing trades are where the biggest lessons come from. The trades where there was a challenge, because I won't just say, oh man, you messed it up. I'll say, here's how you fix it. I found this picture the other day. This is my favorite. Making mistakes is better than faking perfection, guys. There's a lot of people that come through my room that the rest of you believe never lose a trade because they never post a loser. It's not true. There's two types of people in the world, guys. There's the people that lose and the people that lie about it. You can make a solid living on 50% winners with a little bit of management. So post in the room. It's like getting a private session with me. And then keep it simple. Another nickel. Ron, I'll pay for golf. Keep it simple, guys. Keep it focused. In the very beginning, the fewer moving parts you have, the more likely you are to find the success quickly. So the plans that I gave you are 2 trades deep, 2 charts. That's it. You're going to have to learn the looks. The other thing that I dropped in the room are these spreadsheets. There's one for TradingView, and the TradingView spreadsheet shows you what the trades look like. This is what your chart will look like when your pattern is in play. It gives you a couple ideas on management, and more importantly, it gives you ideas on when not to trade. As you grow, start taking pictures. Take pictures of trend, of momentum, of management, of no more longs, no more shorts, and track your progress, guys. Tracking your progress is huge. On the NinjaTrader sheet, basic rules. Again, what it looks like to have that advantage of strong triggers, of a clear path, of an entry area. There's probably about 550 pictures of Nexgen users who have presented in the room. And I said to myself, oh my gosh, that's the pattern. I'm going to steal it. I'm going to create study materials for all my new guys. Ideas on management, patterns that repeat. This is chart reading. And what I'm going to tell you guys is that when you can see the high probability trend trade, when you look at your chart and you say, oh my gosh, it's perfect, without even trying, other things start to jump off at the page. This is what allows you to create your plan. But what you will find is that everything that I teach is rooted in momentum and path, having a market that's pushing and having nothing in the way to stop that push. So learn the first 2, guys. There's a place for you to put all your pictures. And then again, a trade tracking sheet. And guys, the trade tracking sheet gives you the ability. Every time you post in my room, you get a private session. So when you post in my room, tell me what you did, what you saw. Tell me where you did it, why you did it. And if you want to, tell me what you were feeling. Because the way you feel going into a trade has a lot to do with whether or not you're following instructions or rules. Because you'll find that in the best of the best trades, and the trades that work, and the ones that feel effortless, you're going to be calm. You're not going to move your targets. You're not going to adjust your stop frantically. You're going to be like, oh my gosh, I have all these advantages. I'm going to let this one play out. And that's what going back and studying your trade tracking sheet the next day does for you. Ask yourself what worked. But more importantly, ask yourself what didn't work. And as a brand new user, you may find trouble identifying what doesn't work. That's what I'm here for. Is to say, hey, guess what? You're trading in determination conditions. Or hey, guess what? Your entries are too early. Let's focus on that pattern that gets us in at the best spot. Or maybe your management is way too loose, or your profit taking doesn't really make sense. Guys, we'll talk about all of it. And not only what the challenge is, but how to fix it. And when you start seeing what didn't work, you'll notice, if you're being truthful with yourself, that it will repeat itself. It'll show itself every day. So you can use that concept to recognize your thing. And I'm going to trademark that phrase. Your thing is what keeps you from success, guys. My thing was trading into areas as a brand new user. And then my thing turned into exiting too soon. And then my thing turned into holding too long. So I've had about 50 things over the last 6 years, but I've learned how to correct all of them with a little bit of feedback from John Novak, who used to teach the room. Don't omit this part of the educational journey, guys. It's huge. So I've handed you plans. I've given you spreadsheets. We're going to break down the rules individually. You guys can simulate, get a private session all day long. There is no limit on how many pictures you post in my room and ask for help with. I will encourage you. Focus on the advantages. Learn the pattern. Learn to speak them out into the world. Frighten your pets. And guys, by the end of this first hour, you will have everything that you need to be successful with the software. You will have the rules, the plan, the study. You're going to have the analysis, the coaching, but you're going to be responsible for becoming a profitable trader, guys. So I'm here to help, but if you don't study, if you don't practice, if you don't simulate, if you don't post in the room, if you don't track your progress, guys, you're going to get out of the software what you put into it. I'll say it without any hesitation. It's the greatest software in the world. To know where the market could stop, to understand, look at this, where trends could terminate, where reversals can happen, guys. You're going to see this all day long. And if you just calm it down a little bit and focus on the best of the best, you have the ability to find the rest. So we always start with NinjaTrader. It's 3 rules. Each rule, when true, creates an advantage. Rule number 1 gives you the advantage of momentum, a market that's very difficult to stop. Rule number 2 assures that there's nothing in the way, that you have room to make money, sorry. And number 3 is nothing more than defining an entry, the highest probability entry to get you into a trade that is screaming in the direction of momentum and path. These 3 rules only take 2 charts to find. In this room, we focus on crude oil and the S&P. They move a little slower. They're a little mellower. They're very, very easy. A lot of people want to be in the NASDAQ because it's exciting. Guys, if you can't trade the S&P successfully, the NASDAQ is going to chew you up. Just a little heads up there. So your first chart is a large chart. It'll be your 13-2. That's just a description of the bar structure, these dynamic Renko bars. It's a very slow chart. It's a broad stroke. It shows the overall opinion of the market, and it's very difficult to see change on a large chart. But we're going to use that big picture to define the direction, the momentum, and the areas in the market. Rules 1 and 2. Those first 2 advantages can be seen and trusted and identified on 1 bar. Amen, Ron. The best treadmill in the world sitting in your basement won't make you skinny. Just saying. So in this 1 bar that defines direction, momentum, and areas, on your smaller chart, your faster chart, your refinement chart, you'll typically see in a successful trend trade a retracement, which is just a little push up when everything says down. You'll see a bounce typically from an area inside of triggers, and you'll see continuation. And all of that up and down happens inside of 1 bar. So this refinement process is what allows you to reduce risk. This refinement process is what allows you to really maximize your profit potential. And we do it, and I love this picture, because you're not in charge. If you think you are, you got to get over that. Guys, there are men and women with billions of dollars behind them. And when they want the market to go up, it goes up. And when they want it to go down, it goes down. And if you've ever watched the market and it just spikes for no reason, no news, nothing, it just goes up 100 points without any reason that you can see, it's because someone here wanted that to happen. That's it. That's the only reason. Or because somebody took 90% of their position off and the other side got a chance to win. So your first 2 rules are designed to keep you in line with what the large crowd wants. And then your small chart is like a small crowd. They have a lot of money. They really do. They're like the heiress to the throne kind of thing. And they can create those retracements, those pushbacks, those tiny moves counter to everything the large crowd wants. Well, we love their pushbacks because rule number 3 is designed to pinpoint exactly where they're most likely to fail. And when the rules are met on the large chart, they typically fail 70 to 80% of the time, which means that when you learn the high probability trend trade, you're giving yourself the potential to win up to 70, 80% of the time. Let's talk indicators. Um, you don't have to know how these things are created, guys. And the reality is you don't, yeah, I mean, you don't have to know the math. You don't have to know the whys. You don't have to be able to build a watch to tell time. But I do want you to learn the names. So there's a divergence high, and that's a magenta line, and that magenta line prints anytime there's a loss of momentum at a pivot. So the buyers are in control, the market is going up, the large crowd wants it to go up, and then the large crowd sellers say, nope, we really want it to go down. And not only are we going to push, but we're going to rob you of the momentum that you had on your side. You'll see that magenta line. You'll see a cyan line if the same thing happens at a low when the buyers steal from the sellers. You're going to see Fibonacci resistance. You're going to see Fibonacci support. You're going to see yellow 1-to-1s. You'll even see midbands. And these indicators behave differently depending on which chart you're looking at. Both charts will also have trigger lines. Now, trigger lines do about 90% of the heavy lifting. Trigger lines are small, 2 solid lines create the small triggers, or large, 2 dashed lines create the large triggers. You don't have to know the math that creates them. Again, guys, the small are a fast-moving average. The large are a slow-moving average. You're going to use trigger lines to define momentum for rule number 1. You're going to use trigger lines to define termination conditions for rule number 2. You will use large trigger lines to define the amazing entries for rule number 3. Trigger lines are in everything that you do. We really read trigger lines. And now we're going to break it down. 3 rules, that's it. And we're going to do them one at a time. And we're going to start with the large chart. And the large chart must have strong triggers. And strong triggers is what creates the advantage of momentum. And I adjusted my PowerPoint yesterday, but I didn't do it right. So I'm going to pull this picture up first. Large chart defines direction, momentum, in areas. We're going to use the trigger lines to define direction and momentum first, guys. If the background on your large chart is green, the trend is up, you're looking for rules to be met for high probability trend trades long. If the background on your large chart behind that first bar is red, you're in a downtrend. You're looking for rules to be met for high probability trend trades short. The trend is very much your friend. It's cliche, but it's true because the large crowd wants it to go that way. Strong triggers is one look, guys. In an uptrend, small triggers are above the large triggers. The large triggers must be widening, guys. There is no boogie in flat triggers, somebody said in this room once. It's that separation between the small and large, whether it's a small amount of separation or whether it's a big gap. That separation lets me know that the odds are favorable for the market to continue up. In a downtrend, smalls below the large, and it's that gap between the 2 triggers that lets me know that the odds are favorable for the market to continue down. You're going to hear in this room a lot, odds favorable momentum. Odds favorable momentum, guys, pushes a market in the direction of the trend. Odds favorable momentum is the advantage that we're going to lean on when areas have the potential to break. And odds favorable momentum, bless its heart, it covers a lot of the mistakes that we tend to make as new users because it is so difficult to stop. But momentum does go away. Otherwise, the market would straight line forever, right? And when your separation finally goes away, when the small triggers work their way back inside of the large triggers, this is weakness. Weak triggers, anything can happen up or down. Strong triggers, odds are favorable for the market to continue. So we're speaking not only in terms of advantages, but also the disadvantage when that market goes away. Because if anything can happen, that's where the market's more likely to retrace from the middle of nowhere. That is when key Fibonacci areas are more likely to hold. So as the brand new user, let it be very black and white. Insist on that odds favorable momentum. Demand that the market gives you that best of the best look because we're working on building confidence. Learn to avoid weak triggers like the plague because anything can happen. And the more you lose as a new user, the less likely you are to feel comfortable and confident. But there's the motion from strong to weak. And with both triggers down, large and small guys, when one of the small trigger lines gets inside of the large, you can say to yourself out loud, momentum is slowing. But there still may be trades to be taken. And even with both triggers inside, you're going to say anything can happen, but the seasoned user will lean on the idea of a clear path and a well-defined entry and say, all right, I can take it, but I'm going to have to manage it well. I'm going to have to manage it assertively because anything can happen. And that's really momentum. It's a two-slide endeavor, guys. It's either separation or it's not. I always tell people, either your scissors are open or they're closed. You can cut with open scissors. If they're closed, all you're doing is taking a stab at it. So are we good with that? Guys, give me a why in the room. Momentum leads the way, leads the charge. Hard to stop, breaks areas. Momentum is outstanding, and it's rule number one for a reason. However, momentum isn't enough, guys. Leaning on momentum is important, but making sure you have a clear path, making sure that there are no termination conditions present, making sure that you have room to make money. That's the whole goal of day trading, guys, is to make money. Now, rule number 2, termination conditions, is the most broken rule among new users because users think about, well, that area broke that one time. Guys, it's not the one time that it breaks. It's the 10 times that it doesn't. And trading directly into a termination condition typically loses 60 to 70% of the time, which means that there is no advantage in trading into termination conditions. So for the new user, I blanket you with very conservative rules, and if rule number 2 is not met, guess what? Absolutely no trades into the area. But it's okay, because areas break all day long, guys. So we're going to go through the process from termination to clear path, from rule not met to rule met. And just, I want to do this once real quick. When we're talking about termination conditions, we're talking about resistance that stops the market. We're talking about support, resistance, support. Oh my goodness. Resistance, support, divergence, lows, egads, and little fishes. All of these areas you know about long before the market gets to them. So here's the recipe. It's pretty easy. When price reaches the area, when the large crowd gets to that decision-making point, your trigger lines will tell you everything that you need to know. So if price reaches blue Fibonacci support, we're done with price. Now it's time to lean on the triggers, guys. And if both sets of triggers, small and large, remain above the area of support, this is a termination condition. Now, from this termination condition, the market could reverse completely. The market could create a bounce that becomes untradeable that pulls you out of a position, or the market could break. You'll never know what the reaction is, guys. They don't send out memos. There is no chain letter. So waiting for the reaction, if you are not in a position doing absolutely nothing, is your highest chance of long-term success. Not trading into areas that could stop the market, that could create a bounce, that could create a reversal completely. Wait for the reaction. If it doesn't reverse, well, then it's breaking, and there's a process. With all of that momentum, if 2 of your trigger lines, if your small triggers absolutely smash through the area, that area, because of the momentum, has the potential to break. It's only potential. It's not a clear path. Rule number 2 still isn't met. This potential to break area, or this look, is the second trade on your plan. It's called a 50-50 trade. 50% of your triggers are through, 50% are not. If you take this trade, it must be managed assertively. You've really got to lean on the momentum. You've really got to lean on the entry area. Guys, we have identified a way to make that 50-50 look even better. Turn it into a 75-25. When 3 trigger lines break through the area, the breakout is more likely to happen, two smalls and a large. So on the plan that I'm giving you, the KISS plan designed to optimize your chances of success, it tells you that you have to have 3 out of 4 triggers because we want you to find the good stuff. When all 4 trigger lines get through an area, the area is now broken. Support is no longer in play. It actually behaves as resistance. And guys, now your path is clear. Now we're in line for a high probability trend trade. Now we're set up for the best of the best, guys. And your clear path remains in play until you reach the next area. And once you reach the next area, we go right back to termination condition and we wait for the reaction. Now, if you're not in a trade, it's absolutely no trades. If you are in a trade, you might wait for the reaction to decide whether or not you want to hold and see if all that momentum breaks. That's your right. Management is where fortunes are won and lost. Go in the other direction, guys. Strong triggers leads the way. Price reaches an area, and now we count the trigger lines. How many triggers got above resistance? Well, the answer is 0. Absolutely none. Not one trigger above. This is a termination condition. This is an area that could stop the market. This is an area that could create an untradeable bounce. This is an area that could reverse completely. I never know what the reaction is going to be. Therefore, I choose to do nothing. Rule number 2 is not met. Guys, if I'm in a long position, what an awesome place to get paid. And if it's going to break, you're going to see the small triggers smash through first, guys. 50-50, potential to break, not high probability. Manage it assertively. But once 4 triggers get above resistance, resistance is broken. The path is clear. It's behaving as support. And guys, your path remains clear until you reach the next area. So there really is an easy way to use the software. It's boring as all get out because it takes a while. So you can have a clear path from a breakout. When all 4 triggers get above resistance, it behaves as support. That tail with momentum and clear path, that's the pullback on the smaller, faster chart. You're going to learn how to pinpoint where that tail is most likely to form. You can also get a clear path from a reversal. Price reaches resistance, none of the triggers break, the market heads down, and you've got momentum, and you've got a clear path because price has not reached the next area. Again, there's one of those tails. These are the easiest trades you will ever take as a new user, and if you learn this simple recipe, what happens is you start to find the rest. Learn the best, it takes you to the rest. Is everybody good with that on termination conditions? Let's just pull this one up and have some fun, right? And we'll back it up a little bit. 2 triggers through, not the best look, and the area doesn't break. Weak triggers don't get through. That's the area that bounces. 2 triggers through, it doesn't break. 3 triggers through, it still doesn't break. It comes back, retests, goes straight to the termination condition. Guys, your opportunities lie in between the areas. From the termination, off it goes. Weak triggers create no more push up, and the market heads down directly to Fibonacci support, to the tick. None of the triggers break, and it retraces back to resistance that used to be support until it broke. And then the market continues down. And you can see at every fib, and look at the 1-to-1, there's a tail, there's a reaction on the small chart. There's a fib, there's a tail, that's the reaction on the small chart. There's a fib, there's the tail, that's the reaction on the small chart. And you don't know if it's going to be a small reaction into a termination or if it's going to be a big ugly reaction that could take you out. But you will know without question where the market could stop. You will know without question where the market could reverse and where problems can be and where profits can be taken. And we're going to go through and we're going to look at the small chart and see if we can define some entries, guys. And it's that tail with 3 triggers through momentum and it hasn't reached resistance. Let's go see if that little tail was a pullback to an area inside of triggers. And it was. And I bet you one of Pete's pictures is that exact picture, right to the mid band, right inside of the trigger lines. And that is how We're going to define entries. But before we do that, once again, guys, I try to be very forthcoming in this room. There will be times when your path isn't clear because of stacked areas. There will be times where it's fib after fib after fib, where it's fib, where it's divergence high, where it's divergence low, where it's one-to-ones. Guys, this is 90% of your day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of the day is insisting that the market give you exactly what you want to take that trade. You don't need every move. The futures markets trade an average of $220 billion hourly. The NASDAQ alone trades about $239 billion exchanged daily. The S&P is about 174. Guys, you don't have to be the first one in. You don't have to be the last one out. If you learn a simple recipe to grab hold of the best, it takes $400 a day to put you in a six-figure income. $400 a day times 252 trading days is about $100,000 plus a little. Learn the best, guys. Learn how to define momentum first. It takes you a day to recognize separation. Go back and study termination conditions. Learn that language. Price reaches an area. Where are my triggers? I'll tell you what, I'll give you a cheat sheet for that one too, because I am all about the cheat sheets. I'm all about the pictures, guys. I firmly believe that the more pictures you take, the easier this becomes. Here is your termination condition cheat sheet, guys. Price reaches the area, count triggers. It's either zero, no trade. Whatever you want, Swathi. Whatever you want. 2 triggers, potential, not the best. 3 triggers, looking good. 4, it's a clear path. So I don't give trading advice, but Swathi, guys, will you do me a favor? Give me a Y in the room if you've been with me for a while and you think $400 a day is very doable on as little as 2 contracts. What do you guys think? I put my Y in there too, because there's no doubt in my mind. I'm already up $600 today on 2 contracts. So Swathi, with 2 contracts, it's very doable. Andy says with 1 contract, it's very doable. So what happens when you start trading 10, 15 contracts? You're over leveraged, and if it's part of that 20 to 30%, your losses are huge. And they don't have to be as a day trader. Not yet. You can do it later when you've got the account to support it. But there's your answer, Swathi. Almost everybody with a voice in this room says that 1 to 2 contracts is more than enough to find that $400 a day. Pretty cool, right? I think there's a lot of misconceptions about day trading, that you have to make thousands every day to be rich. And it really just boils down to math. And Swathi, can I tell you one more thing that's pretty cool? And you'll love this. And this is for everybody in the room. If you can make $400 a day consistently, there are trade copiers. Nexgen Pro Trader Funding has a trade copier that allows you to copy 5 accounts. If you make $400 a day and you just take it on 1 account, it's mirrored on 4 other, suddenly you're making $2,000 a day from that same $400. It's just being mirrored on other accounts. And now if you multiply that by 252 trading days, it's a $500,000 a year. Hypothetically, of course, guys, I'm just crunching numbers. But it's not about making all the money. It's about making the easy money, the high probability money. And that's what I teach in the room. Have you guys ever had the day where you've taken 50 trades and you've made $100? And then the days where you've taken 3 trades and you've made 1,000? It's pretty common. Let's define entry, because this is the third advantage that you're going to recognize. This is the advantage that helps with management a lot, guys. And a trade is first momentum to go to the hair festivals, and then it's a clear path. And then and only then, when the large chart says, you go to the small chart. And your entry is so specific, guys. I want you to learn this language, and I want you to write this down, especially if you're a note taker, because you will call your shots. You will see your entries. You will see them long before the market gets there. Victor said he waited 30 minutes for an entry today. 30 minutes for an entry today, and it was worth every minute. Guys, you're going to use a limit order to buy or sell a pullback at an area inside of triggers. That's your phrase, which means that if everything is going up, you're not jumping into the market. You're going to buy the pullback, the small push down created by the small crowd. You're going to wait for them with a limit order at an area, at a fib, at a mid band, at a yellow 1-to-1, because the same way on a large chart, these areas can stop a trend. On a small chart, they can stop the small crowd and create a bounce into the direction of the large crowd. But here's the most important part. I'm going to buy or sell a pullback at an area, but that area must be inside of those larger synthetic triggers. On your 5-1 chart, on your entry chart, you have two sets of large triggers. You have one that is native. They're smooth. I'm trying to pull it up here. And the smooth triggers, you can actually gauge those against the small to define momentum on the small chart. And then you have these step triggers. You're not my real triggers. And the step triggers are from the large chart. They're the synthetic triggers, guys. And there is this phenomenon. You mathematical gurus may get this one. It's called regression of the mean. And what it means for us is that price returns to triggers. Price returns to these large triggers, guys. So when your area is inside of the zone that defines retracement, this is your highest chance of success. This is where the best entries come from. This is where you will call your shot when the market is all the way over here, because you know the only place you're going to enter that high probability trend trade is at an area inside of triggers. As a brand new user, you're learning the easy stuff so you can find more trades. So when everything is up, large chart is up, large chart has momentum, large chart has a clear path. Have I beat that horse into the ground yet? When the large crowd, where's my picture? Dagnabbit. When the large crowd, when the people in charge, when the men and women with the oomph to create the trend, the momentum, the path, when they say we're going and there's nothing in the way to stop us, you're going to wait for the small crowd to go down. You're going to wait for a reversal bar, guys. It's very counterintuitive because your brain is going to say, oh shit, the market reversed. It didn't. This is a tiny little movement on an insignificant little chart, guys. The reversal bar starts the fight, the down move, the small move counter to the underlying trend. You can define precisely where that fight is most likely to go, from the top of the large triggers to the bottom of the large triggers. Don't differentiate between large and synthetic. They're both large triggers, and your retracement zone is from the top to the bottom. And most likely is the word I use because sometimes it doesn't get there and sometimes it goes right through it. But inside of that retracement zone, you need areas, you need fibs, you need mid-bands, you need yellow 1-to-1s. These behave like brick walls to your tennis ball, guys, and this is where the market is most likely to bounce and continue with the trend. And sometimes it creates a window, the window of opportunity. If you're a Ric Flair fan, it's the woo. From the highest point of support to the lowest point of support inside of triggers. This blue shaded box is where the market is most likely to bounce. And here's the thing. I know that I'm most likely to retrace to the bottom of the triggers. And I know that I'm most likely to bounce from somewhere at an area inside. But because of the large chart advantages, because of the momentum, because of the path, you'll activate a limit order just above the highest point of support, closest to the reversal bar. This becomes your entry for the highest probability trend trade. If the market is capable of pushing beyond the triggers, beyond the areas inside of the triggers, you will teach yourself to ignore any lines on what I call the wrong side of the triggers. Because once you get down here, the advantage of rule number 3 is no longer in play. You're no longer in the spot where the market is most likely to bounce. And guys, your initial stops will be placed 5 ticks below those trigger lines. And you're going to say, if the small crowd can blow through everything good, I've lost my advantage, I accept my loss. And guys, small losses are a normal part of a positive equity curve. Anything that loses 70 to 80% of the time is obligated to, or that wins 70 to 80 is obligated to lose 20 to 30. So Swathi asks, do we still have momentum on the large chart? So Swathi, we're going to do two things. Whew, that's a small chart. Guys, when you post in my room, it's okay to blow your charts up a little bit. It's okay to not make them so small, just so you know. So Swathi, we're going to do two things. We are going to, anytime you guys ask me this question, this is how I answer it. Strong triggers is a separation between the small and large. It's a gap between the small and large. And this is the best of the best. Weakness is when the gap is gone. That's the least likely to push. And then remember, just a moment ago, we talked about the idea that as you grow with the software and as you begin to recognize the difference between strong and weak, you'll see this look where you get one of the lines inside Swathi, so there's no longer space, but it's not quite weak. So in your picture, that's exactly where you are. You've got one line inside and one line outside. So what does that mean? That means that when you look at this particular look, you'll say something clever like, it's not weak, but not best. I'll manage. There's a lot of opportunity there. But if it's not the best of the best look, you might say something clever like, since it's not the best of the best look, I'll insist on an area inside of triggers. I'll demand that my path is clear and that my entry is easy to identify. Does that make sense, Swathi? That's a nice look on the large chart. We still have some push. The path is clear, but the challenge that I see over here is that there are no areas inside of those triggers. So defining an entry is going to be just a little more difficult. And you may need to say, since I don't have my rules met, maybe I'll force one of those reversal bars in the direction of the trade. Maybe I'll demand that it goes up with that momentum and path, since once I get below those triggers, I don't know if, when, or where the market may continue up. And guys, we make money both ways. It's like both sides of the buffet. When the large chart's down, when the momentum is strong, when the path is clear, we're going to wait for a reversal bar on the smaller, faster chart. Guys, this is the high probability trend trade. This is the first trade. There's so many other options out there. But this is the one that teaches you to read your indicators. The reversal bar begins the pullback. The areas inside of triggers define the entry. Anything beyond the triggers is where the market shouldn't go, where the advantage of this rule is no longer in play. So reversal bar, not the entry. Trigger lines define the retracement, not the entry. Area inside of triggers for entry. Limit order goes a tick or two below. Stop will be placed about 4 to 5 ticks beyond those triggers, where the market shouldn't go. Entries taken from the wrong side of the triggers typically lose more than they win, because you don't know if, when, or where the market is likely to continue. So, let's pull up for grins that pattern that we just talked about. And I want you to see something. I'm going to take the cheater circle off. Everything I do is patterns, guys. Everything I teach is patterns. So the one that I want you to recognize here on the large chart is that there is momentum, that there is separation, that it is the best of the best look, and the odds are favorable for the market to continue up. Can you give me a Y if you see it? Because that is a great look for momentum. I've got 3 of my trigger lines through that Fibonacci area, and I have not reached the next area, which means that this blue line has the potential to break, and I haven't reached the next termination condition. I can go look for an entry. So I turn my attention to the smaller, faster chart, and it's going up, and it's seemingly going up without me. And this is a little disconcerting. And it continues up without me. But I'm looking at trigger lines and I'm saying, well, if I get a down bar, that's where they're likely to go. And it continues up. And I'm like, well, I don't have any areas inside of the triggers yet, but it's still going up. And then it goes up and it keeps going up. And there's my reversal bar. And I've got a mid band right at the top of those triggers. Guys, these are moving averages. Give it a tick, right? If you're in front of the retracement zone, awesome. If you're on the wrong side of the retracement zone, dangerous. You're just going to right click and you're going to put a limit order just above that mid band. And you're going to say, with this momentum, with this potential to break, and look at, you've made that decision at 33, your entry is all the way down here at 19. If the small crowd comes for you, boom, 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 you're in a trade. You're in a long trade. You're in a long trade with momentum, with the potential to break from the area most likely to create the bounce. And sure enough, it does. And off it goes to Profitville Population U. This is the pattern that we just talked about. That's it, live in front of you. That is the high probability trend trade. Little bit of separation, 3 triggers through, pulls right back to the area inside of triggers, never gets where the market shouldn't go, and sure enough, it's still going up. Guys, do you see it? That's your pattern. This is what I talk about every day. So you've got to learn the pattern. When you have momentum, when the path is clear, if you go back historically, you'll see those tails. Remember I said we don't trade those tails. The rules say buy a pullback at an area inside of triggers. Without ever having taken a trade, you can find your large chart look, you can circle a tail if it's there, and you can see if it fits the rules. And guys, this is your pattern. This is the pattern that repeats itself over and over. This is the pattern that's in the spreadsheet, and I'm going to do this. I do this every day because I think this is important to do. When you have momentum, when there's the potential to break, you'll sell a pullback to an area inside of triggers. And guys, this particular picture is from 2022, and it's the pattern we just discussed. And I don't even remember who Arnold is, but this is his picture. And it's the tail into momentum. Do you see it, Swathi? And it's a clear path. And it's the pullback to the midband inside of triggers. So there's that not quite perfect look. But it's still the same pattern. And off it goes. And that one is from 2022. And then here's one for the ladies. Angela's represented here. First it's momentum. Then it's potential to break. Then it's a pullback to a midband inside of triggers. And down it goes. And guys, this is the pattern. This is the pattern that you can prove, that you can study, that you can commit to memory. This is the pattern that opens the doors to see the rest of the patterns. Are there any questions about the high probability trend trade, guys? Any questions about momentum? Any questions about path? Any questions about entry? So it becomes a matter of repetition. Learning the 3 advantages, strong triggers, clear path, entry, so that you can put these together to create a trade. Guys, I've given you everything you need to be a rock star. Now it's just time to put nose to the grindstone. Learn it. TradingView. TradingView is the other platform. It's not the better platform. It's just different. It's a little different in the bars that we use. We use Minute versus Renko, and there's one difference in the areas. In the areas, we don't have Fibonacci on TradingView. We have zones. And there are free versions and there are paid versions. Nexgen doesn't create supply and demand zones. You have to go outside for that. There's a company called Chart Prime. I pay $50 a month for Chart Prime. It is worth every penny in my opinion. There are free versions. If you need help finding them, let me know. You still have divergence highs and lows, one-to-ones, mid-bands, large and small triggers. Guys, you've got everything you're accustomed to seeing, but the difference are the zones. Treat them like fibs. Don't trade into them. The bar structure is different as well. Your large chart is a 15-minute chart, guys. There is so much that can happen in 15 minutes. That's 4 bars an hour. You can get a 100-point swing inside of 1 bar, but we're going to use this chart to define direction, momentum, key targets, and terminations, the exact same way we do on NinjaTrader. The 1 minute is your small chart, the refinement chart, the immediate strength from the trigger lines chart. And this is how you're going to define entry points. Guys, in the KISS plan that I give you for this platform, there are minimal workspaces. NASDAQ and ES are in there. If you are a gold trader, if you're a silver trader, whatever trader you are, just change the symbol. But in that workspace, there are no large triggers on the large chart because they're just too darn slow. There are no background colors on the large chart because you'll miss so many opportunities if you're focused on red or green. So small triggers and indicators, and then reading the large chart, because it is so slow, is a little different. Instead of using background color to define direction, you'll just use the direction of the small triggers. And they are either up or they're down. Swathi, tell me why. Write why. It's so easy to enter a trade, guys. I could enter 1 million trades a day. If I don't know why I entered it, how can I repeat it? How can I study it? How can I prove that it wins more than it loses? Guys, one of the most important parts of posting in my room, one of the most important parts of asking for feedback is that you tell me what you saw in regards to momentum, that you tell me what you saw in regards to path, and tell me why you did it. Why did you jump in? What made you in? How did you manage it? Right? Swathi, you're not even trading with stops, which means you're putting all of your hope in a market that's going up, which is outstanding. But with stops and targets at this point in the move, I would already have my position protected, because who knows if the next retracement is coming. What's not working for you? When you say it is, what is it? Limit orders aren't working for you? When you say it's not being applicable, is it because they're not reaching it or because limit orders don't work? Well, it's not on. You have it set as none right now. There is no ATM strategy for limit orders. So Swathi, let's just double check real quick before we get too deep in here, because this is important. Can you right click on your chart, and your first option, if you right click below price, should be buy limit order. Does that show up when you right click on your chart? It does. Okay. So your limit orders work. You can right click and you can put a limit order in. Yes? Okay. So your limit orders work. Your challenge is that you put a limit order down here at the mid band and those assholes don't come get it, right? No? So price hits your limit order, but it doesn't fill. Okay, so do this for me. Over here on ATM strategy, Swathi, there's a little down arrow, and that opens this up. Just pick any one that has a 12 tick. Anyone, doesn't even matter. We're just going to try to get it working for you. So just pick one. Doesn't matter which one. Okay, so work with me here. Let's not worry about what has happened. Let's see if we can move forward and make it happen. So let me know when you see that you have an ATM strategy, when it doesn't say none. Are you still in that trade or are you out? Okay, so take a picture and show me that you have an ATM strategy real quick. And guys, this is what the classroom is for. It's not just reading indicators, it's also getting the help that you need to be able to use these tools. So Swathi, show me a quick picture of your small chart. I just want to make sure that we're there and that we're good. I love this part of the day, guys, because you got to learn to use the tools, and that's exactly what we're doing. And this is helpful for all of you guys outside. All right, so you've got it. So here's what I want you to do, Swathi. I don't want you to worry about the trade. I don't want you to worry about winning or losing or anything. I just want you to hit buy market, just right there. Just hit buy market. And tell me if those stops and targets end up in place. Because this looks like they should now. And if they, oh, it worked. Ta-da! And that's all it is. You just didn't have it in place. But now it's in place. So now you're set. And if you just need a little comforting, close that position. It works for all orders. Oh. All right. So what market is that you're looking at? That's the S&P. Let's go to it. I love this. This is fun for me. All right. So here's your S&P. So Swathi, I want you to do me a favor. This is not a real trade. I want you to right click at 68.34 and I want you to put sell limit 2 just above it. Activate that order. Whoops, there it goes. You may have to do it a little bit higher now. But I just want you to do it and let price hit it. So no matter where it is, you could activate it all the way up here. Just pull it down and bury it in that price so that you get the order filled. And let me know if those stops and targets show up. And if they don't for some reason, I'm going to send you over to my tech guy. But guys, one of the great things about the accuracy, all right, and that hit the limit order. You didn't hit sell now? Just want to make sure. Okay, so there we go. But now we've done most of the legwork on this one. So here's what we need to do. And guys, I will always try to tech my way through as much as I can. And then we hit snags that I can't fix. And oh, I hate it when that happens, but it does happen sometimes. So Swathi, there's the link to Jason and Tech. Do me a favor, set up a ticket with him, talk to him for just a moment, and he may have an instant fix that I don't know. So now we know that it works for the buy and sell, but we can't seem to get it for the limit. I've never seen that. 20 bucks says Jason has. So I'm sorry I wasn't more helpful. I'm sorry I don't like it when I don't have the answers, but I know the people that do. So let me know how that works out for you. I could, Jen. Afternoon. There you go. Let me know if that worked. Little refresh. All good? Jen, can you see it now? Awesome. Cool. So guys, let's learn to read the large chart. More gremlins. Andy. Got a bell on your motorcycle? Guys, the direction is either down or it's up. So for the brand new user, let it be decidedly up or down. If they're transitioning, if they're flat, if they look like they're pointing to the right, it's okay to sit on your hands. Let them figure it out. This particular market, first bar, is pointing up. We're in an uptrend. I'm looking for rules to be met for trend trades long. The second step, where is the current price in relationship to the triggers? There are 3 places it can be. So what I've done is I've blown up this little section and put it up here. Price can be to the left. The most current highlighted price can be left of the triggers. It can be right of the triggers, or it can be inside of the triggers. I like it. Go do your duty, Victor. So Justin Raygun, the purple and yellow highlighted lines, those are what we call one-to-ones. And a 1-to-1 is a 100% Fibonacci alternate, and they are like fibs in the moment. So in an uptrend, they can behave as resistance. In a downtrend, they can behave as support. And what it is your software is constantly running calculations. And what a yellow 1-to-1 is it takes this big move. When there's a move up, A to B, C to D. And it'll measure from, well, that's too small, from A to B. And then when it gets this C pivot, it projects a 100% Fibonacci alternate. That's what creates the yellow dots. The pink dots are from smaller moves. And in crude oil and the S&P, they're not as significant. If you're a NASDAQ trader, they really do come into play. But what you'll notice is that on either platform, they can stop a market or they can become an entry location. Does that help? And guys, if you ever have questions, I probably don't reference this enough. Straight from the website, straight from the trading guide, every question you could ever have is laid out here. So there's a section called the indicators. There's an awesome video. If y'all are one of the people that need just a little more in depth instead of, a little bit of the whys, John Novak does a great job of describing them right there. So the resources are definitely there. Let's get through TradingView large chart read. First, it's up, and then there's 3 spots, guys. There's left, right, or inside. These 3 locations of the most current price are going to help you with management. They're going to help define momentum, guys. And if you are left of the triggers, you are on the strong side of the triggers. And when you're on the strong side of the triggers, that's the best of the best. This is where 1-minute areas are most likely to break. This is where bigger moves typically happen. If you are right of the small triggers, you're on the weak side of the triggers, guys. This is that anything can happen. You can still take a long trade, but you're going to have to really look at those 1-minute areas and be willing to get paid at them because they're more likely to create a bounce. And if you're inside transition, this is where maybe partial profits, maybe getting paid at an area going break even, and all you're doing is defining momentum, the best momentum, the slowing momentum, the weak momentum. And guys, on a 15-minute, you could have all 3 inside of 1 bar, which is why we use the most current price. And then finally, just, is there room to targets? Is there room to targets? From where I'm going to enter the market, is there room to get to where I want to be? And if the answer is no, sit on your hands. If the answer is no, don't go to the small chart. You're giving away one of the most important advantages. But if the answer is yes, if I have defined direction, momentum, and path, I'll go to the small chart. And guys, the most common entry is a trend trade entry. This is about 80-90% of your trades. This is the easy trade. This is the so easy to recognize. All the patience in the world, guys. And it starts with the 15-minute, not trading into areas. The 1-minute, not trading into areas. The most common broken rule among you guys is trading into areas, hoping stuff breaks. Give yourself room to targets if you really want the best chance of success. And then the entry for the trend trade is a buy or sell, a close on the correct side of the small triggers at 1-minute midbands or areas. So I'm going to give the visual. If the small chart is up, if it's in transition, or whether it's strong or even if it's weak, I have to have room to targets. Is everybody good with the large chart read? If you practice it for a day, you're never going to mess it up. True story. When you go to look for your entry, if the small triggers have turned down, when the small triggers here are up, if they turn against you, that's your immediate momentum. If they're inside of the large, if you've reached an area, guys, your job is to look lower, to look for mid-bands, to look for a zone, to look for 1-to-1s, and say to yourself, the market has to pull back to this area. That's what gave Victor 30 minutes waiting for his trade earlier. He was calling his shot long before the actual trade ever presented. And when it gets to the area, not before the area, when it gets to the area, your entry is an up bar that closes on the correct side of the triggers. Well, the correct side of the triggers happens to be the weak side of the small triggers that were against me. That's where reversals tend to happen. And when you have a large chart that's going up with nothing in the way, and you hit that area and get a bar that closes above both corners of that close, that's where the continuation comes from more often than not. Guys, you even have a timer on your 1 minute chart. So if you've got 48 seconds and you're at that area, you have 48 seconds to do nothing to see if that bar closes up. I was talking about things. What's your thing? What robs you of success? When I started TradingView, guys, trying to anticipate a close on the correct side of the triggers, because I would try it, I would get ready, I would anticipate it, and then the market would do that and just rail against me. It's real important to wait for that actual close. In a downtrend, from the strong side, with room to targets, the moment the small triggers roll against me, my eyes go up higher to mid-bands, to zones, to one-to-ones. And then I enter, I mash the sell now button when this bar closes below the small triggers, on the correct side of the triggers, on the weak side of the triggers. And guys, that is the path of least resistance as a brand new user with TradingView. First, define the direction, define what the strength is, define the path, and then go find your entry. And what you will find is that once you get good at that one trade, look at that termination condition. And I said it earlier, if you don't think they know where they're going before they get there, guys, you're fooling yourself. Tail reaction, tail reaction, tail reaction. And when they got to this one, 41.50, that's where the buyer said, okay, we're done. We've reached our profit. Sellers, it's your turn. Take a push if you want. And the sellers said, we will, and we'll steal your stuff on the way. Guys, when I talk about, and I want to go to this, when I talk about the best of the best, the high probability trend trade, I want you to know that it opens doors for the other trades. So even in the TradingView, guys, there is what's called an HVA trade. This takes advantages of those terminations that reverse the market. But if you don't understand terminations for a good top or bottom, you're not going to be successful with this trade. If you don't know how to define it, you're not going to be successful. If you can't define areas for entry and get accustomed to waiting for that entry, you're probably not going to be successful. There's also momentum trades, guys. And once again, if you don't understand tops and bottoms, terminations that reverse the market, termination conditions here, areas used for entry, very specific language, you're going to struggle. The same is true on TradingView. And I'm going to show you the other TradingView stuff, guys. I'm only doing the trend trade because the trend trade is the easiest. The trend trade is the best. The trend trade is the highest probability. But there is a plan outside of the KISS plan. And it talks about reading the chart. And it introduces you to trend trade entries. And it introduces you to momentum trade entries. And on this chart, there are actually 3 different trades that you can take. And when you learn the trend trade, how to read the large chart, how to have room to trouble, it sets you up for the rest of the trades, guys. But since what I talk about is the absolute best of the best, look at that. Gosh, I love this stuff. You have to believe that there is so much opportunity for you outside of these very basic trades once you learn to speak in terms of momentum, once you learn to speak in terms of clear path, once you learn to define entries, guys, that's when you get the keys to the kingdom. That's when you get the golden goose. Now, your job is going to be to study a little bit so you don't turn it into fried chicken. You've got rules. Have a wonderful day. Everybody has the ability to get feedback. I've handed you plans. I've given you spreadsheets to study. And now it's up to you, guys. Now it's time to make the decision. Do I really want to be a profitable trader? Do I want to be a day trader? Do I want to change my life? And if the answer is yes, well, now it's time for you to start snapping pictures, posting in the room, participating, asking questions, getting clarity, That's what the rest of the room is going to be, guys. So until you get to where you want to be, stay very active. And guys, I'm going to go through and I'm going to click on all the charts that have been posted this morning, all the trades that have been presented. I'm not going to be the trade police. I'm not going to tell you, hey, you shouldn't do this, because I don't give trading advice. What I do in this room is I give you a foundation, and the key to everything is that foundation, understanding the basics and then growing. This was a response to an email from someone that got really upset in my classroom that people were posting trades that weren't high probability. Guys, for new users, I blanket you with conservative rules, the recognition of advantages. I hand you that plan that optimizes your chances of success as you learn to read your indicators. So if you're brand new with me, guys, no momentum is bad, and areas beyond the large triggers for entry are bad, and termination conditions are horrible. And it's that way because these blanket rules increase your likelihood of success. And confidence comes from the memory of success. They're not always bad, but until you have the experience to know when to create those exceptions, it's just safer that way. And then the more time you spend with it, the more you see. So focus on the process that yields the results, guys. Understand that you'll never know what the market's going to do, but if you learn these simple patterns, you can have an edge every time you enter the market. And the more you deviate from the basic, the more you stray from the easy, the longer it typically takes you to get to where you want to be. So ask a million questions. I encourage it. Um, don't be shy. Guys, I'm going to take about 4 minutes, and when I come back, we'll get into the second half. We'll do live chart reads, guys. If the rules are met when we're reading the chart, we'll enter on simulator for the fun of it. If they're not, we won't, because that's my only option. Either rules met or rules not. Um, but we'll start looking at pictures, guys. I'll be back in about 5 minutes. Sometimes areas break. Sometimes they don't. Kind of cool, isn't it? I love it. All right, so I'm going to roll up. PSP 116, how we doing so far? And then I know there's a couple of you. KOLN, how we doing so far? There's a lot coming at you guys in the beginning, and I know that's true. And I don't at all try to deny it or say that you're going to be a rock star on day one. Remember, the first day or two is really learning the language, guys. The first day or two is kind of getting a feel for how the classroom is taught. The first day or two is all about hopefully you're watching and listening and seeing that I'm not really mean. I can be, but I try not to be. I want you to be successful. I want you to win more than you lose. Guys, I want you to keep it easy. I want you to stay focused. I want you to find an amazing amount of success. That's my goal and my hope for everybody. But it's not my responsibility to find that success for you. So, like Ron said earlier, the elliptical in the basement doesn't do anything for you if you don't get on it, right? You could give me, I'm going to show my age, Mario Andretti's car, and I'm just going to put it into a wall until I learn how to drive it. So it's important, guys, that you give yourself a little bit of time and a little bit of understanding. And this is from Pete, and Pete's a master of taking the idea of momentum, separation between the small and the large, recognizing that this area does in fact have the potential to break based on all that momentum, and then finding an opportunity over on the small chart to just capitalize on momentum and path. And he doesn't wait for the pullback. He didn't trade into the area. And guys, this is a trade that is created by a gentleman in this room. And I don't know that I'd trust him with my pets, but he's really good at momentum and path. And Ron C. created this trade called the chili dog. And it revolves around momentum. And it revolves around price getting away from the decision-making areas. And there is a way to take quick profits based on only those two concepts. And Pete, you do it really well. And guys, if you're doing it well, you need to make sure Ron's on your Christmas card list. And then here, strong trending market stalled when it hit prior divergence. And guys, the idea is that if you hit an area and the triggers don't break, don't trade into the area. Pete says, I'm going to do it anyway. You can't stop me. I've been doing this a long time. You're not the boss of me, Mark. And he says, when it pulls back and starts back up, because this market's been doing nothing but up, I'll jump in. But I know it's not perfect because I know what I'm up against. I'll get paid right at that pink line, and I refuse to leave any risk on the trade. I will manage assertively because I know it's not perfect. And guys, take and manage becomes a battle cry once you learn to read your indicators. Nicely done, Pete. Making something out of nothing. Now this one's got a lot going on, right? Let's see what's going on. Guys, this is a strong trending market, 30 bars in the same direction, and the path is clear. And the one thing that this doesn't have are areas inside of triggers. But when you have a strong trending market, there's this idea to keep buying the mid-band until it doesn't work. So I love this. And guys, this is one of the things that coaching in the room does for you. Pete says, took a momentum entry without momentum, stopped out. When will I learn? Everybody has a thing. And I can't stress that enough. And the sooner you identify the challenges that get laid out in front of you guys, the sooner you start to fix them. This is Pete's thing, jumping into momentum trades without momentum. And it didn't work. And then he did it again. And it didn't work. But you held this one because you're mad about this one. And then sure enough, it goes. So one of the things you guys can do, and Pete, I'm going to give you a little something for these. When the small triggers roll up, you're like, everything's below triggers, I don't know. That right there. Small triggers roll up, snap back to the small triggers. Guys, that's a beautiful way to find continuation, especially when it's at an area. And what it does is it lets you let all of this nonsense play out until all of your indicators agree again. And it's just a continuation style entry. And then for those of you that like that style entry, that you see, oh my gosh, it's not perfect, but I know everything still says up. I'm looking for my picture. There's the picture right there. 3 divergences, no more trades, let it roll. Follow the large chart. Second lower divergence. Exit condition, but when everything rolls, follow the large chart. So good management. Good second chance entry kind of thing that puts the odds in your favor. Great trading, Pete. This looks like a Paul chart. Let's see what's going on here. 15-minute are up in the transition, nothing in the way. There's your pullback to the zone on the 1 minute. There's your close on the correct side. Entry's just a little late, and it's directly into trouble, right, Paul? Directly into trouble, and you said, oh no, uh-oh, and then it goes up straight to the zone, and you just didn't believe it. So from the transition side, Paul, you didn't believe that that zone could stop it, and you gave $70 back. Transition. Get paid. Go break even, guys. That's an awesome phrase to put into your management plan. When you know it's not the best here, don't lose money. Manage your trades. Be assertive. It's okay. The entry makes sense. It's a little bit late. But management, guys, management's going to be the difference between great days and okay days. Management's going to be the difference between huge trades and huge losses. It really is. But great entries create very manageable trades. And you will know exactly where the market's most likely to bounce, to stop. And let's see what we have here. Trend trade. Triggers are down. Prices on the weak side, I'm not sure where you got in, over here, okay, 57, so you wait for it to get below, I like it. Since it's on the weak side, manage assertively. Small chart, you waited for price to go past the trouble area, then you enter on the way down. Beautiful getting paid and getting paid, nicely done. Easy 500. And guys, this is what I mean when I say management will be the difference. Beautiful trade here. Whoops. Beautiful trade here. Didn't manage. Same beautiful trade. Managed. Such a different loss, or such a difference. Had a prior trade loss, could not set your stop loss, machine locked up, had to reboot when I got back in, had to close immediately as it was going south quickly. No stop loss or profit target set. That is scary. It's the perfect trend trade, Victor. Nice management. Management pays dividends, guys. I love this. Good top, which means that it is a termination that reversed the market. These charts are cool, Cam, and I like the look. It has all the same tools, just a different look. Momentum, odds favorable. The path on the 13.2 is great. There's room to trouble. Path on the 5-1, who cares? I like it over here. Perfect entry right at the area inside of triggers, and the market goes down. And then, yeah, this is Ninja. This is just a different look. Pretty cool looking, right? And then that second higher divergence is an awesome management. That higher pivot showing divergence is a good management opportunity. Guys, if you're a brand new user, you're keeping your stops in place, you're doing things. As you grow, and we talked about this yesterday, as you grow, when you see that second divergence or that pivot from a higher divergence, it's okay to exit. It's okay to say, you know what? Things are changing. Maybe that's not my best. You can always get back in with a reversal bar, but Cam, that's a great management lesson there. But it's a beautiful entry. It's all of the reasons. It's everything we look for. And you nailed it like a rock star. And that's an acceptable loss on that trade, without a doubt. Nicely done, Cam. And then this one, I like it. So, odds favorable. Nothing in the way. And then, so large chart rules are met. I love your can't talk. Charts are so clean. And then Cam, you tried the chili dog, right? Messing around, I'll try the chili dog. So, guys, one of the things about that chili dog trade, if you really want to take it, it's not a Nexgen trade. I don't really teach it in the room, but what I will do is I'll give you my study on it, because I thought Ron was full of beans when he created this trade. So I went with the intent to prove him wrong. And I hope you guys will come at me with that intent to prove what I tell you is wrong, because if you do that, you'll be with me forever. And when I did that to Ron's trade, I'm a believer. But it means that you're getting in close to these areas when you get away from the decision making. And chili dogs happen a little bit closer to the fibs on the small chart, and they're really quick pops. So Cam, you're absolutely right. Entry should have been higher, 100%. And now the challenge, and you even said it, entry has a mid-band red fib, but not inside of triggers. And once you get beyond those triggers, guys, you don't know if, when, or where that market is going to go up. Remember when I said you're in charge? It's your right to demand the entry, to demand it on your terms. Cam, are you with me in here? This is one of those times, guys, where I say this chart is perfect. It's odds favorable momentum. It's clear path. I couldn't hope for anything better. But on the small chart, this is where I use the language. If my language is sell a pullback at an area, at an area, inside, there's that ever important word, inside of triggers. Newer users, older users, all the users, can you see how there's not an area inside of those triggers? How the areas are beyond the triggers, where the advantage of rule number 3 is no longer in play. This is very important, and the language becomes very important, guys. If I'm on the wrong side of the triggers, but the large chart is perfect, here's your right as a user. I can demand a reversal bar from the area to enter, because I know that the advantage of rule number 3 is no longer in play. And if I never get a reversal bar, guess what? I never take that loser. And if I do get a reversal bar, well, I've got something to put my stop behind. So this is one of those things, and Cam, I hope you're listening. You may be off doing something else. Guys, you are in control. And if you can identify that it's not perfect, it is your right to force that small chart to go in the direction of your trade with a little confirmation. Beautiful trades. Boaz, strong triggers, clear path, pull back to the area inside of triggers, beautiful. There's that second lower divergence and an exit. And then Boaz, I dropped this in the room. Guys, when the large chart is perfect, if you choose to exit with the second lower divergence, that reversal bar is your re-entry. Does that make sense, Boaz? When the large chart is perfect, and guys, it's so important that you let that be the factor, that reversal bar is a great way to re-enter, to go with those advantages. And then if a third divergence prints, then it's over. But you still got in and you managed and you made money on a trade that ultimately fails. Great job, Boaz. And then the same look the other way. Momentum, path, no areas inside of triggers. You can demand the down bar. You can demand the down bar, and there it goes, all the way down. And Boaz, today, so I've been watching TradingView for a while, but I see all the stuff you guys see. With momentum and the potential to break, I wait for confirmation. I'm out of trouble. A little small chart management. 3 divergences in the same price range. Guys, the automated system said take a short. The large chart was perfect for a short. Small chart shows change that you can't see on the large chart. And guys, when you start getting these multiple divergences, when they're coming from fibs, when they're coming from 1-to-1s, you're literally seeing a market that is trying to change. And what it does is it keeps you from hoping. It shows you these things. So if you're a NinjaTrader user, There's a ton of information on a small chart, and if you commit yourself to learning a little bit of it, it really does pay dividends. And then Boaz, there's your trade. I waited for the confirmation bar, and then I got out at trouble. That's your exact trade. You taught me that, Boaz. But I even put on my annotation, because of the divergence from the one-to-ones, I choose to wait for confirmation. It helps me out. And guys, what you'll find is that when you get in tune with the two charts working together, that idea of big chart, small chart really does pay dividends, because there is information on a smaller chart that helps out. All right, strong triggers, not that strong. It pulls back. I went long, but it rolled. Entry and exit. So let's talk about this. Who was this? Who's going to claim this chart? I love this chart. What a great look. I don't know who it was. If you want to claim it, you can. If you want to say, oh, organic, this is you. Cool. Thank you. So watch this. You guys ready for the kicker that is day trading? I want you to see something. And this is important to me that you guys recognize this, and more importantly, that you accept it. If the perfect trade is momentum, path, and entry, right? If the ideal scenario means that there is momentum, and organic, let's make this, see if we can make it a little bigger. I want to go through this. So organic, you had momentum, yes? Strong triggers, smalls above the large, space between the two. Everything says the odds are favorable for the market to continue up. I love it. I could teach a class based on that look. You also had every trigger above trouble, and you hadn't reached trouble. You also had a clear path. In organic, you entered just above the area inside of triggers. You had a clearly defined entry area. Can we all agree on that? That this is the perfect look? It has momentum, the path is clear, the entry area is easily defined. Your stop may have been a little tight, because stops can go where the market shouldn't, which is on the other side of those triggers. That would be my only critique. But organic, were you trying to figure out why? Why did it lose? I followed the rules. Why did it lose? I entered at the right spot. Why did it lose? I had the advantages. Why did it lose? Guys, anything that wins 70 to 80% of the time, as this pattern does, it must lose 20 to 30%. And this is what we call a cost of doing business. Now, the question that you have to ask yourself is, if I take this exact same trade 100 times, how many times do you suppose you're going to win? Probably about 70 or 80, which means that you're obligated to lose 20 to 30. And the kicker in trading, guys, and this is why I said you'll never know the outcome of your trade. I'll never know if it's the 70 or the 30, so I have to be consistent in my execution and its probabilities. Does that make sense, organic? This is the perfect trade. This is a beautiful trade. This is everything. I would take that trade with you. I would lose that trade with you. Now, organic, the next question is, why didn't you take this one? Because it's only 2 triggers through. That may be it. Only 2 triggers through. That's a good look. It's the exact same pattern, no divergence, all the momentum. A lot of you guys will grow into taking that one, especially from a strong bottom. But I think this is one of the things, and this is a great example of why we post in the room. Because if you take the perfect trade and it doesn't go the distance, you're going to beat yourself up. And you're going to say, oh my gosh, maybe it was the divergence. It wasn't. Maybe it was the weaker triggers. It wasn't. It just didn't work. I love this trade. And guys, this is one of the trades where I would take that pattern, I would steal it. I would go to the spreadsheet that I tell new users to study, and organic, I'd put it in here. I would call this perfect high probability trend trade didn't work because the pattern is consistent, 100%. Andy V, have a great afternoon. All right, Stephen F. Mark, I watched the ATT video yesterday. Thanks for recommending it, which I watched it last week. I was assertively managing positions after the system entered a trade. I never dreamed that I had to manage the entries. I will close entries on the small chart if they don't look good, even though the entry looks good on the large chart. Oh, Stephen, I'm ecstatic to hear you say that. And true story, you were on my heart this morning when I saw this look right here, because when I saw that look right there, those three divergences, the automated system gave a signal. Do you see it? The automated system said the large chart is perfect. My small chart said, Mark, dude, don't take that entry. And Stephen, I think that, and I know that it's frustrating, right? Because you're like, I've got an automated system. It should be winning all the time. The power is still in your hands. So as you grow and you start looking at these things and you start studying these things, man, you are cordially invited to lean on me as hard as you need to. As hard as you need to get it. Let me help. I want to. So cool. I'm glad that made sense. Swathi, all you have to do is call Jim Forbes and say, Jim, I'm tired of trying to figure out the best entries. I want the automated system to give them to me. But Swathi, you're still going to have to learn some small chart management. But what it does is it takes the perfect large chart entry, and then it gives you the ability to impart just a little bit. Hey, Stephen, have a good one, and thank you for taking the time to show up and tell me that, because I really have. I've had you on my mind since our discussion yesterday. Let me know how I can be helpful, please. Good stuff. But Swathi, Jim Forbes, it would be your connection on that one. And then there are some great videos straight from the website if you want to look at them and get a little more into it. Let's go to the next one. I'm having fun, guys. Trend trade. Triggers down, price on the weak side, space to trouble. Consistency. Consistency in chart read. Small chart waited for price to get to the area, waited for the close below, and then just rode that thing down. Didn't set second profit target. Should have managed better based on momentum on the small chart. My bad. Got out of the trade for 540. I will, Swathi. I do them in order. Unfortunately, I can't always stop. If there's a question on it, awesome. Right? We'll get to them in the order that they are presented. If it's a 911 emergency, then at least write a question on the chart for me so we don't have to go back and forth on it. This is a beautiful trade, and Victor, I love that you're not happy with $540. It means that you know there's more out there. But guys, if 400 is a six-figure contract, couldn't you take that trade and shut it down? I feel like you could. Momentum, strong bottom, no divergence, pull back to the area inside of triggers, out at trouble. Both of them out at trouble because that is trouble. Nicely done, Pete. All the momentum. There's your strength. There's your path. There's your pullback to the areas. It's a late entry, but still a beautiful all the way up to trouble. Easy 275. Boaz doing it like a rock star. Two triggers through. All the momentum. Perfect entry. Out at trouble. Manage the trade because the path isn't clear. Over and over and over. Not again. Momentum. Path. Ugh. Is this a good trade? Do you know what I consider a good trade, Boaz? You're going to hate this. This is such a Sunday school answer. I consider a good trade any trade where the rules are met. I consider in my own trading a bad trade if my rules aren't met, if I broke my rules. So you may not have a momentum trade off the midband in your rules yet. But from the termination, with the momentum, when price breaks through that midband and it snaps back, you could take a momentum style entry off that midband. Ideally on these momentum trades, the area is at the triggers, not the wrong side of the triggers. but 100%. That's it. It was the small chart management, Morgan. The last automated trend trade video John made was the small chart management. Have you seen it? It's freaking brilliant. I have virtually high-fived my brother 10 times on that one. I think it's some of the best. Oh my gosh, let me get you that one. Boaz, it's a momentum style entry off the mid-band. You're welcome. Morgan, here, I'll just go back to the first one. This one was amazing too. Oh my gosh. This is some of his best work as well. Let me copy the link address. That is a lot of management in there. And then trend trade entry logic, momentum trade. Let me see where it's at. Trend trade system with and without small chart management. That's a really good one. You're welcome. And guys, you know that you're always welcome to come to the room and say, hey, Mark, I watched this video. Here's a still of what I don't understand. And can we talk about it? And there may be even one more, Morgan. Let me see. Trading view how-to, trading view tips, indicator. Nope, it'll be down here. Automated strategy. Trade management for 100% fully auto. That's the one that I think is change your life good, Morgan. Let me know if you have any questions on it. All right. Triggers are up. Termination. Oh, Jen's going the other way. Termination, smalls are above the large, odds favorable momentum, and you take the HVA trade. Guys, this is one of the ones. This is the when you can't go long anymore, there's a pattern for going short. Jen, a little aggressive. I'm glad you got paid. It's a beautiful profit. Breaking a couple rules for sure. But using that termination as the basis to look to go the other way, guys. There's a big difference between going counter trend from the middle of nowhere and going counter trend from a termination when you just absolutely positively can't go long anymore, and it's mimicked on every chart. Nicely done, Jen. All right. Everything is down. Pull back to the area. Enter on the correct side of the triggers. Make some money. Organic, that's you again, right? It's perfect. Everything is down. Nothing in the way. Pull back to the area. Amazing patience. Get in on the close on the correct side and get paid. That's the goal every day. Great job. That's the perfect trend trade. And then Miss Trina. Down. Transition. Looks like room to trouble. Market pulls up, hits the area, closes below. Lost big. And it just kept going up, didn't it? Happens sometimes, doesn't it? I would put stop behind the high pivot. It just didn't work. I can't find anything wrong with the trade, Trina. The same way organics was the perfect trade. Sometimes they lose, guys. Sometimes they lose. Sometimes the perfect trade doesn't win. And you know what the kicker is? Sometimes a horrible trade wins and makes you think it's a good trade. Talk to me, Swathi. What are you wondering? Odds favorable momentum. 2 triggers through. What did it look like at the bottom of that tail? This is only one chart. What is that, the S&P? The S&P. Let's go find that look. May have been back a little bit, huh? Sound effects make everything better. I don't know if you guys knew that. All right, Swathi, here's your picture. You didn't ask any questions. You didn't say, hey, Mark, what am I looking at? What does it mean? Is it fit a rule? You just posted the picture. That makes it hard for me. There's only one lady whose mind I'm obligated to read, and you, my friend, are not that lady. The length of the magenta line. Okay, so when this divergence is no longer in play, great question. Nope. When that divergence is no longer in play, when price gets above it, when the software deems it's no longer a factor, it'll stop printing. At the time of the entry, it was still a factor. You would say to yourself, okay, I had momentum, the potential to break. There's my pullback to areas inside of triggers. I need to be aware of that divergence line. Does that make sense? And then when the market gets way up here, it just stops printing. And what you'll notice, Swathi, and it's pretty cool, the same is true with these one-to-ones. When the math is no longer in play, they just stop printing. When this divergence is no longer a factor, it stops printing. When this divergence is replaced with a lower divergence, it stops printing. When this fib is no longer active, it'll stop printing. And it's neat how the software does that. This divergence is relevant until there's a second higher divergence, and now this is the one that we have to focus on. That's a good observation. Well, it's not a clear path because of the fib. And it was still very much in play at the time. Let me look at your picture real quick. Just to make sure I'm not missing something. So see how it was still there at the entry? It was still there at the time of the entry. Where did it go? So it looked just like this when the trade was taken because it had momentum. It had two triggers through, and it pulled right back to the area inside of triggers. Do you see it? And how do you study that? Circle a tail. Does that make sense, Swathi? So it was there at the time. And all it says is, hey, you know what? If I take this trade right here, let me make sure things don't get screwy. And they didn't. It didn't even blink. Made absolutely no impact on that trade, so you would just hold it and enjoy the ride. But I love it because what it does, and I've said this a lot, and I'll just keep saying it because I really do believe repetition creates recognition. This line doesn't say no trade. It says be prepared to manage. That's it. It doesn't say no trade for 90% of us. For the 10% that are brand new, it might say no trade, but you're going to break out of that quick. It just says, hey, if something goes weird on my small chart, maybe I get a lower divergence, maybe it starts pushing down, I'll manage. But if nothing happens, I'm riding that momentum north. Great picture, Swathi. Good question. But you'll see that a lot. Where they're just no longer in play. Things that you'll also see, guys, while we're talking about it, and it took me a while to realize this, until this bar is done printing, this synthetic fib that doesn't extend to the right, you won't see it. It doesn't mean that you have a clear path. It does it on the mid band as well, but your synthetic fibs, until this bar finishes, you won't actually see them. And it's funny because I didn't know that was a thing. And one of our users pointed it out for me. It was one of the users that says, dude, but I had a clear path. And I realized, I asked John Novak about it. So just because you see that one bar length doesn't mean that you have a clear path. When the bar is done printing, the synthetics and the mid bands will actually print, and the one-to-ones as well. Little extra information you probably didn't want, but now you have it, which is good. Can't really be too smart, can you? And what happens, guys, and I'll say it again, and I say it every day, is that when you start focusing on the main things that are really important to finding that success, you begin to see more and more outside of it. Don't put the pressure on yourself to be a genius on day one. Don't put the pressure on yourself to be a profitable trader in your first 30 days, guys. There are things to learn. And we all want to get there sooner than later. Learning to day trade is like December 15th. You know that there's 10 days and you're chomping at the bit and you're shaking presents and you're peeking in stockings and you're just so freaking excited you can't contain yourself. But you still have to wait until it's time. So 2 trades. The first trade, trend trade, triggers up, price on transition, clear space to the next troubleware, will manage since price is in transition. Small chart. Came in late. You're in at 66, which means you have about 4 ticks to get to resistance, and it just didn't make it. It did eventually, right? So if your stop was in the right spot, you still made it. You lost at 56. So, Victor, it's okay. It wasn't, right? So, guys, I'm going to show you one of the things about trading. If I choose to enter late, it doesn't change where the market shouldn't go. Arbitrary numbers used for stops get hit. They know where you're at. They know where the scared people are, guys. So if you choose to enter late, your stop still goes below that pivot. It has to. That's where the market shouldn't go. And if it's too much risk, guys, it's cool. You don't have to. You don't have to take that trade. The second trade, the triggers are up. You can't fight triggers that are in your direction, right, Victor? This is one of the things that I'm working on. And I don't have a rule for. But Victor, this was your trend trade, right? Let's do this real quick. Let's take another picture. This was your trend trade entry. What is that up bar with the up triggers? It's just part of the original trend trade, isn't it? And what is that bar not doing? That bar is not fighting. My small triggers have already rolled and they're in the direction. You don't have to wait for a close above. The whole idea for waiting for a close above is to make sure that you're not fighting down triggers. If they're already going up, you're in the trade. The trade's going. The trade's working. Everything's happening that you want to see happen. And what you'll find is that this gives me too much risk, right? My stop belongs down here off screen. But why did you wait for it to close? Why did you wait for it to close directly into trouble? And guys, this is a progression. This is a progression. This is your trend trade. Everything after that until it hits its target is the same trade. It's the same trade. 57. Oh, you're 57.50. Okay, I'm sorry. I saw 67. My bad. So you are in down here with a way more manageable stop. My bad. I apologize, Victor. Sometimes I make mistakes, guys. Call me on them. I love it because it's the exact same trade. It's just continuation. You're not fighting. You're above trouble. Love it, Victor. Great job. Way to get it back. Way to get it back. Net $40 though, right? Net $40 between the two. Lost 400 with the wrong stop placement. So how do we stop giving away $400 every now and then? Have a management plan where the market shouldn't go. Great job, Victor. Great job. Sometimes I learn when you guys post, and that was a good one. All right, Aaron, let's see what you did, man. Let's see what's going on in Aaron's life. Strong-ish, no such thing, I guess. Large sharp momentum, waited for the second pullback. Got in, didn't quite manage correctly at the top. Profit reached 300-ish. Held on thinking it was going back up, but it just kept going back down. So I got stopped out at $100. We're going to get you to stop thinking, Aaron. Guys, and this is one of the things, I think annotation really opens a window to what you're thinking. And Aaron, your phrase is, I thought it would continue. I thought it would go. I thought, and let's change that phrase to the indicators say. So the indicator said, your best entry was at 36 at the area inside of triggers, which gives you, and this is an important thing, $180 to trouble. That's outstanding. Your entry at 47 gives you $70 to trouble. And thank goodness trouble broke, right? Thank goodness trouble broke. But from 47 to 67 on 2 contracts, if you're following the very basic KISS plan, that's your $300 trade, Aaron. Does that make sense? I know you don't give trading advice, but should I have just taken my profits at 300 and been happy? I think I was being greedy. I am having FOMO. What if it continues to go up or corrects and goes back up again instead of just being happy with 300, even 250 or just 200? And you're right. I don't give trading advice. So one of the ways, Aaron, one of the ways that I help you overcome your emotion as a brand new user. And can we agree that you're a brand new user? I think so. Guys, I still feel like I'm a brand new user. Are you in here, Aaron? Okay, you are in here. Cool. No worries. So let's talk about it. One of the things on the plan that I give you is management for a high probability trend trade, right? Management for a high probability trend trade. Well, Aaron, I can't for the life of me get you to take a trend trade. You just jump in. So the first step in management would be taking the correct entry. Can we agree on that? When you learn to get in low, when you learn to buy low, you've got room to trouble. When you learn to buy low, you've got room to trouble. So what we have to do is get you focused on learning that entry rule first, and that's going to help. But let's go on to it again, and let's use the idea of the KISS plan, even though it's not a trend trade. If I'm in at 47, does it make sense, Aaron, to go ahead and accept and take and be cool with $70 at trouble? Because that line could stop the market, right? That line could stop the market. There's $70. That's cool. You could take both of them off, take your $140 and say, I don't care what happens next. I'll take the next trade. This is hard to do, especially as a new user. From your entry at 47, it made it to the $200 target, which in the KISS plan is what is the get out of the trade no more. So let's say you took one off at trouble and you hold the other one for 200, and it either hits 200 or you make 50 bucks on it. And that's your option. And you say, if it doesn't hit 200, I'll take my 50, walk away with 120. Is that fair? So now you've got some parameters. My management plan says if I jump the fudge in, first sign of trouble, half off. Second, I'll hold for 200 or break even, whichever it gives me. And now you have a very decided plan, no matter where your entry is. First sign of trouble, 200 or break even. And now there's no emotion. It's if then. If it hits this fib, I exit. If it goes to 200, I exit. If it doesn't reach 200, I accept break even on this trade, no matter what you think is going to happen. Does that make sense? But what happens, guys, is if you don't know how you're going to manage a trade, your emotions flood. The adrenaline floods the crazy works its way in, and you're letting your emotions dictate, not what the indicators are saying. Aaron, you had room to trouble. Nothing wrong with it. A better entry gives a little more profit potential. But until you guys are comfortable, it's okay to get paid. That's what the KISS plan does. The KISS plan teaches you to get paid. But Aaron, if you made $200 on the... No, let's back it up. If you took both contracts off at trouble, it's $140, right? Aaron, do you believe, have you watched enough? Do you believe that you could take that same crappy little trade 3 times and probably win it with momentum and path? You could take that same little short trade, that tiny little, I have all the momentum, nothing in the way, let's see if I can get to trouble. And Aaron, this is what we talked about yesterday, right? If you're going to jump in, have momentum on both, works beautifully, doesn't it? Do you suppose, Aaron, that you could find that 3 times in a day? I feel like you could. Do you know what $420 times 252 trading days is? Aaron, do you have to make all the money to be a successful trader? Does it have to be a $500 trade to be a successful trader? Do you have to make $700, $800 every time, or it just sucks to be a trader? Absolutely not. So while you're still learning to trust entries, you've got to believe that getting paid is the goal, and your account doesn't know how it gets filled. It doesn't care if it's $50 at a time. It doesn't care if it's $100 at a time. And that what-if monster will kill you guys. Because when you enter the wrong trade, that little what-if monster is going to say, but what if it works anyway? Put in a bigger stop. But what if it works anyway? Don't exit this bad position. What if it works anyway? Hold on, add contracts. And the same is true when you're in the perfect trade, Aaron. The what if monster says, but what if it just turns from the middle of nowhere? I better move my stops. What if this one isn't going to be one of those winners? I better take a tick and then get the hell out. And Aaron, I'm going to tell you, and I'll put my laundry out there, and it's not clean. I was the king of the perfect entry and making a tick on it because I was scared to death that it would turn against me. I'd get up 5 or 6 ticks and I'd go break even +1 and it would stop me out and run. And I would take 20 trades a day and I'd be down $200 on commissions. It's embarrassing. But guys, this is why in the very beginning, until you can do it without emotion, have a plan that helps you do it without emotion. Great picture, Aaron. And what great conversation for the room. Is it okay to get paid? Can everybody answer that question for themselves? Is it okay to get paid? Is it okay to wait for the next trade? Is it okay to just post in the room and say, isn't this kick-ass? I have no idea why I did it. Swathi, why? Why did you go short on the S&P at 39.50? What made you decide to take that entry? Guys, I don't make a lot of demands on you. I don't. Okay, clear path. Swathi, can you repeat this trade? What if you wrote a checklist? What if you said, if I have strong triggers, if I have a clear path, I'll jump in and hope. Now you have a checklist, right? Now you have a checklist for entry. Now you can do the same thing, Swathi. Now you can take the same entry at the same location with the same advantages every time. Now you can go back and you can prove that with momentum and nothing in the way, there's the opportunity to make money. That's the entry side of it. Does that make sense, Swathi? And just heads up, I love this trade. I really do. But here's the second half of it. You have to also be able to answer, how will I manage this trade? Where do my stops go? What are my targets? And that's what we were just talking about with Aaron's trade, right? Getting in is half of it. So you just answered it. That area, when price reaches it, could stop the market, right? It could create a bounce that pulls you out of this position. What a wonderful place to get paid. And if you went from 39 to 30, 39.50, 39.75, 9 points, Swathi, that is $450 per contract. Pretty amazing, right? Pretty outstanding. Do that 3 times a day. But one of the reasons that I insist that you guys annotate your charts, it's not for me. I know exactly what you did. Swathi, you said, oh my goodness, it's strong and it's clear, I'm going to jump in. Absolutely. Create a checklist for yourself. Hold yourself accountable. Write down the whys so that you can manage it, so that you can repeat it, so that you can do the same thing every day that brings you that awesome success, Swathi. Does that make sense? And I know I'm a colossal pain in everybody's butt asking you to take the time to type, but I promise you, in a long-term scenario, it pays dividends because when you know why, you know why not. Termination on Ninja, multiple attempts to get through here. Down bar, open below, there's your entry. Get paid, get paid. Momentum trade, pull back to the one-to-ones. Get paid. Miss Jen, beautiful. First it's a termination, then the small triggers roll. You wait for your bar pattern, you get out at trouble, get paid again, take the momentum trade, get out at trouble. Just outstanding. Usually you brag about how much you made on that trade. I'm just going to say it's a lot. From 61 to 43 is 360. From 61 to, is that 25? That's a lot. But now I'm going to have to go add it up for the highlight reel. So is that 25? So that's another 25, which is another 500. So that's 860. And then from 22 to 08 is 14. No, it's, yeah, 14. Another 280. We'll just say you did it twice. 560. So that's about a $1,300, $1,400 trade, Jen. How long did it take? Hold on. 1, 2, 3, 4, 5, 6, 7 minutes. Over $1,000. Is there anyone else in the room that thinks, wow, what a great way to make a living? Just got to wait for the good stuff. All right, Z-Robot, you're posting. I love it. First post, you said post anything and anything. I like it. My documented drawings are like a mechanical engineer's drawing. What do you think? Too busy? I'm on micro, 1 contract to test the plan of behaviors, not a rockstar trades. It's okay. So your questions, high-risk trades. What's the question about them? How do you define it? I love this. Z-Robot, this is great. So trend trade only. M is momentum. And you gave me a key. I love that. So let's look. You had momentum, right? You had a clear path. So break. Let's talk about the midband. And let's just go through it all. So the midband is a termination condition if the large triggers are a full bar away. And we call that the gap theory, guys. And what the gap theory says is that, because you're an engineer, you'll get it. If these large triggers don't follow and price hits a midband, price is more likely to bounce and close the gap back to those large triggers. Does that make sense, everybody? Remember when I said regression of the mean? That's it. Plain and simple. That's how you define the midband as a termination. So your particular trade, midband was off the table. Didn't even need it to break. Does that make sense? Perfect. Cool. So you had momentum. Your path was clear. You took a pullback to an area inside of triggers. And you wrote it. Pull back to an area inside of triggers. So what do you think? Was it the perfect trade or not? Was it the perfect trade? Yes, without question, 100%. Can argue it all you want against it being the perfect trade. I will have your back 1,000%. Why? Because you had momentum. Ooh, that's really small. Because you had path, and because you had a well-defined entry. No, why would it be higher risk? It's the perfect trade. Do you know what's higher risk? Trading without momentum. You know what's higher risk? Trading in determinations. Do you know what's higher risk? Not entering at the area inside of triggers. You had everything defined. Now, I see one exit. I don't see the second exit. It looks like you took two off. So what made you exit right there on the perfect trade? Was it fear? Was it trying? Okay, fear. Cool. That's what I wanted to hear. Is this from this morning? Okay. So this is what I want to do. What time was that? Give me an Eastern time for it. I absolutely will, Nathan. Is your chart in Eastern? It was like 9 a.m., right? Let's go find it. And I want you, and I'm going to go through this, guys. Management's important. I know that I've mentioned it, and I'll mention it probably 1,000 more times before it's all over. Was that it? 9:45? Hold on. Nope, 9:27. Almost there. Man, the NASDAQ moves, doesn't it? There we go. There was your trade. Nope, that's 37. Holy smokes, the NASDAQ moves. Oh, 32. That's the open. This is why the NASDAQ isn't built for beginners, guys. 30, 30, 27, 25, 24. All right, I'm just going to circle this one right here. And we're going to go through, gosh, that's just so far back. Hey, look at that, momentum potential to break. We're going to look at yours. I play this game, Z-Robot. What changed? From my time of entry, what changed? And we're going to do it on yours because I think this is part of management. Until you learn to get good at it, use the idea what changed. Now, you weren't able to define, not yet, because you're still working on it. This is the perfect trade, right? It's the perfect trade. What's the expectation for the perfect trend trade? Fibonacci support. Does that make sense? Guys, if you are in the perfect trend trade, Fibonacci support, that's the goal. When it's momentum, when it's path, that's it. So you take the perfect entry. And when you got scared, what changed? Well, I'm going to talk about it. You got a down bar in the direction of your trade. That's a positive, not a negative. Does that make sense? So there's a down bar in the direction of your trade. That's a positive. Price is getting below the small triggers that are up, which means the market's more likely to continue down. That's a positive. The large chart momentum hasn't changed. That's a positive. You still haven't reached your target. That's a positive, right? So management becomes this idea of what's the thing that could start to pull away my positives? Well, that divergence low where you put targets, that's something that could create a bounce. And it did. Great place to get paid, even if it's partials. And if you re-entered at the mid-band inside of triggers, great place for partials. But look what happens. Here, you get an up bar. Great management reason. Here, it doesn't blink. No reason to manage. And then you get a close on the other side of the triggers. And now let's look at your second trade. Does that all make sense on that one? That was the perfect trade. And Z-Robot, I'm going to tell you, when you're nailing entries, management becomes easier. And it takes some repetition. It really does. Down here, you're close but not quite there. and you get the pullback to the mid-band, and I love it. And then it doesn't go where the market shouldn't. I love it. And then you finally get a down bar in the direction of your trade, and you jump ship from the good side of the small triggers. So if we go back to that exact same principle, do you see how from the time of entry, it didn't go where the market shouldn't? Very basic 101. It started in the direction of your trade. That's an advantage. That's confirming it's doing everything it's supposed to. And nothing changed. It just kept getting better all the way down. And Z-Robot, NASDAQ's a hard way to get going. It really is. It's a fast market. It's a crazy fast market. And what happens is when you have a plan, when you're formulated, when you get into the idea that when it's the perfect trade, I'm going to force something to change on my small chart before I ever consider an exit. You could have held this one all the way down because all it did is keep getting better. It was the perfect trend trade that turned into another trend trade that turned into another trend trade that was doing good things as it headed down. Great stuff, man. Did I answer all your questions on that? I love how mechanical you are. Awesome. Keep it up. That mechanical pays dividends. Nathan, are you with me, brother? Dun, 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 dun. Let's go to and let's find a gap theory real quick. And there it is right there. So the gap theory is based entirely on the idea that price returns to large triggers. So what the gap theory says is that if price, and I'll type it all out and I'll give you this picture. If price accelerates away from the large triggers and hits something, and let's just leave it at that. If it hits something, that's not a real word. If the large triggers are a full bar away, it's more likely to close the gap to those triggers. Now, it happens if it hits a fib, but if price reaches a fib and the triggers are below, that's a termination condition anyway. If it hits a mid-band and they're a full bar away, that's a termination condition. But the thing is that the mid-band finds itself not a full bar. There it is again. Closes the gap. But here when we reach the mid-band, those large triggers aren't quite a full bar away, and sure enough, the mid-band is a non-issue. So it's a pretty recognizable pattern 3 minutes after it happened. And what happens is people get caught up on the momentum, and I'm going to find it again, on the momentum down, and they say, well, I can take this short right here because with that much momentum, that area might break, right? But that gap theory says, don't do it. Let it close the gap. Let it do its thing, and then wait for the reaction. Wait to see what it does after it closes the gap. And here you can see what it does is it comes back and retests support. All the triggers remain above support, and sure enough, the market continues up. That's it. Or support, depending on the direction. And you're going to use this reversal bar marker to gauge it. So when price reached this mid-band in 1-to-1, the reversal bar shows you where this becomes a complete down bar. In an uptrend, if the large triggers are below it, well, then they're a full bar away. And in a downtrend, if the large triggers are below it, down here, there's your reversal bar marker. If they're below it, if there's a full room, then you know they're a full bar away. So that's one of the ways that we use the reversal bar marker on the large chart. And if you look at, guys, for you guys that want to study this, the spreadsheet that I give you has like 30 gap theory pictures in there, and all of them are annotated. That one's even called Gaparoo, which is kind of fun. Price hits, large triggers don't follow. And if you try the long trade, You get absolutely smoked as it pulls back to those triggers. Good stuff, guys. Good lessons. These are the lessons that you don't know you need until you get into it a little bit, guys. Focus on entries first. All right, good small chart management lesson here, Cam. And you typed in there, it's actually a great question. Yeah. A lot of people don't think it's okay to get paid, Cam said. I agree 100%. So momentum, path on the 13-2. Guys, this is why posting in my room is so important. Gapparoo, you like that? Cam, are you in here with me? Do you see how it's only 3 triggers through? It's not 4 triggers through the area. Yeah, so what is that? That's potential. That's all it is. It's potential. It's a good look at potential, I'm not going to lie. But it is only potential. Now check this out. Let's go back to basics, guys. If a trade is momentum, you have momentum, and a trade is a clear path, and you don't have it, you only, it won't go in front of it. It's only potential. And you have an area inside of triggers. Do you see how it's 2 out of 3? And that's okay. There's still a lot of great things that happen. Things that make this trade more likely to work, Cam. And this is what's in the KISS plan. Coming from a strong top, coming from a termination condition that reversed the market, that's not in play. Do you see that divergence? That divergence is the #1 killer of potential to break. That divergence on the small chart is the #1 killer of potential to break trades. And here it's a little exasperated because it's divergence from a 1-to-1, which again is pretty detrimental for the potential to break. And if you go to the KISS plan, and I keep referencing the plan because as you guys get your feet underneath you, this is just a way to kind of keep you on the safe side. The entry rules mention no divergence on the 5-1. And it's so important that it reminds you, and the management reminds you, that divergence is a killer. So a brand new user might not take that trade. A brand new user couldn't take this trade if they were following rules because it wasn't a strong top and because divergence printed. Designed to optimize your chances of success, right, Cam? But let's be honest. Let's be real for a second. These do work, and they do work, and they work a lot, but they work better if they come from a strong top. And that, for me, is without a strong top, I don't try it if there's anything else wrong. If it were from a strong top, I may take one shot, but let me give you a little insight. So Cam, the entry's not perfect, right? And if you break it down to the 3 things, you say my entry isn't perfect, or a divergence high even. Just a termination that reverses the market. That's the language. Cam, could you say, here we go again, giving you control. Because it's not perfect, I will insist on a reversal bar. That's it. Because it's not perfect, give me a reversal bar, I don't take the trade. That is my demand, market. Because it's not a strong top, because there's divergence, the only way I'm going to enter this trade is if they give me a down bar. And it doesn't guarantee success, but at least then you know that the market's moving in the direction of your trade. And if you never get it, there's just no trade. But do you see how we could go back to momentum, path, and entry? And if I define divergence as a loss of momentum, I'm losing that first advantage. I told you guys everything would go back. Everything would go back to momentum, path, and entry. So Cam, one of the things you could do is if you re-annotated this chart, you could go back to and say, okay, these are some of the warning signs on that potential to break trade. These are the things that I'm going to keep in my sight when I take them. Pete, strong triggers, from a termination, room to the next fib. You take the perfect momentum trade, and that perfect momentum trade, Pete, leaves you room to get paid. What an outstanding momentum trade. Momentum, potential to break. Let it snap, let it go. I love this trade, Pete. That's about as sexy a momentum trade as you're ever going to see, guys. And Pete, you executed it flawlessly. Flawlessly. All right, Cam. Gap theory. Oh, you're short. You're short. And you said that you had odds favorable momentum. All right, Cam, this is hard for me because I love you, but I got to be honest, right? This is your grandma smacking your hand from the hot stove because she loves you. You took a short trade. Can we agree that the momentum is up? Small's above the large are getting wide. And you took a short trade, and there's not a clear path down because the smalls are up and above. And you took a short trade at support inside of triggers that are going up. This is like topsy-turvy world. Did you get paid on it, Cam? These are the worst trades to get paid on because you believe that you're doing something good. So can we do the other side of it? That's okay. You got lucky. If you don't know why you did this, you got lucky. Now, if you said, are you ready? This is a weak bottom, not a termination that reversed the market. We're going to reverse engineer it, Cam. And because, check this out, because it's a weak bottom, that potential to break is less likely to work. And it even hit a termination. So from a weak bottom directly into termination, 50-50 is less likely to break, right, Cam? We got that lesson on the other direction. There's your divergence directly from a fib on a 50-50 look on this fib with the gap theory in play, and you enter to close the gap. It's a brilliant trade, Cam. It's a brilliant trade, but there's more things that go into it. It's counter trend, it's against momentum, and there's a little element of hope. But because it's a weak bottom, the same way it was a weak top, that area is less likely to break. Because of divergence from the fib, that area is less likely to break and more likely to stop any forward progress. Because your small triggers rolled, you have a fighting chance. Because you're below the large triggers, you have a fighting chance. Because you have room to get back to those large triggers on the gap, you have a fighting chance. Cam, this really is an outstanding trade. This is a trade that's going to lose more than it wins. But it was orchestrated and executed beautifully. And this is why I want to make sure that you know why. That you know why you did it. Because you said odds favorable momentum. I'm calling bullshit. You have odds favorable momentum up. You say you have 3 triggers through the bottom fib, but you don't, right? So, and I'm not busting your chops, Cam. Guys, when you annotate your chart, strive for truth because you'll believe whatever you type. Every picture I've ever taken in my life, I take a Sharpie and I write best looking guy in the world at the bottom of it because if I write it, it's got to be true. I believe it, right? So you don't have momentum. So I like it. This could be an addition to your plan. Right on. But be honest, guys, because when you identify things correctly, what it does is it sets you up for management. When you know what you're doing is counter trend, Cam, it gets you hyper aware on that fib that could cause trouble. It gets you hyper aware on that fib that could cause trouble. So good job. And I do. I love the trade. I love the trade. It's a really advanced trade. But to be able to recognize it, to justify it, to see it, you really can reverse engineer a lot of the things that make a crappy 50-50 trade. You turned into a beautiful gap fill. Nicely done. Ron knows the same thing. When you reach a termination, when divergences start printing, Ron says, let me get above the large triggers. Let me get the small triggers in the direction of my trade. Let me enter with the second higher divergence, which is an exit condition for a short. And let me make quick profits up to trouble. And guys, this is the pirate trade, the counter trend. White bar really shouldn't work trade. And he puts the disclaimer on there for my new users. Once I learned the high probability trend trade, I started to see things like this. High probability trend trade is not intended to get rich on. It's designed to teach how to use indicators and see other trade. Thanks, Mark. You're welcome, Ron. Things like this make me want to use the treadmill more. Make you want to do the practice. And guys, I remember when Ron created the chili dog and I thought, oh crap, what is he doing? And then he came up with this and I thought, oh my gosh, what is he doing? But the thing that you guys don't see is that Ron put countless hours into the development of that trade. Ron took hundreds of pictures in the development of that trade. Ron shared a lot of pictures with me and said, hey, do you see what I see? And there's so much work that goes into getting outside of it, but you can do it. All right, Trina trend trade. Strong top because it reversed the market. Odds favorable momentum, absolutely. 2 triggers through. You've already had a pivot stop out. You've already had a divergence, right? You get out at trouble that could stop things. And then you don't leave anything on the trade. Nicely done, Trina. If you're going to take a shot, strong top helps. If you're going to take a shot, strong triggers help. If you're going to take a shot, divergence could kill it, but you're willing to take it. And then, Trina, do you see how you could have had the exact same entry almost with a reversal bar? But the management on this is what's great. Understanding that it's not a high probability trend trade and choosing to manage assertively and get to break even. Trina, I love everything about your trade. And even if I hated it, I like everything about you. I'd never tell you that. You do not have a reversal bar? It's a down bar right there. Oh, you need the marker. You need the actual reversal bar marker. You don't have it on either. Is that Wayne? Can we blame Wayne for that? I'm just kidding. Let's set it up. All right, so right click on your chart. Are you with me? And guys, you can do this all day long. If you need help, knock it out. So go to indicators, and we'll center this. And go to T3 Fibs Pro Trader Synth New. So click on it. And I'm going to scroll down until I see this right here, reversal bar marker 1. And reversal bar marker 1, I'll show you the settings. You'll want to show reversals, show reversal price, and you can make it any color you want. And it's going to be the same setting, Trina, on the large chart and the small chart. So you can put that in, knock that out. And then you'll always know where that down bar will become a down bar. Your settings look like that? So that is where you may have something corrupt, something going on. Things I would do, I would right click. First would be to reload all historical data. And just let it do a quick little reboot. You've done that. Okay. Second thing to do, it's something tick in there. Second thing to do would probably be, I would go ahead and repair and reset the database. That's something you can do to try to freshen things up, make sure there's nothing wonky back there. Yep, both. And you'll have to close your workspaces and shut down NinjaTrader after. And then the other thing you can do, Trina, and you can try this first. Do you know how to build a chart? Nope. All right, let's do it together. Let's have some fun. Say when. Are you ready? Cool. So go new and then chart, and it's going to bring up our little input screen here. What market was that you're looking at? It doesn't really matter because it works the same everywhere. So you have to choose your market. I'm going to do crude oil because it opens faster. So I've got my market. It's going to be crude oil current contract. Now I have to put my template in. And Trina, this may be where the challenge is coming from. Go down. So if we're, oh, no worries. So first it's new, and then it's chart, because we're building a chart. Got it. And then once you click chart, it's going to get the data series. This is the inputs to put in. So pick your market. I pick crude oil. You can do whichever one you need. If it's gold, whatever, that's cool. ES, NASDAQ, whatever you're trading. Let me know when you're there. Cool. So right next to it, load template only. I want you to go to your drop-down menu, and we're going to build a 5-1 chart, Trina. Same would be for a 13-2. We'll build a 13-2. So if I'm building the large chart, it's a 13-2. If it's the small chart, it's the Nexgen 5-1 Rinko. Ron, have a good one, man. It's always good having you here. Hit them straight. So we're going to build the 13-2, Trina. So you can see that I have my template, 13-2 Rinko bar chart. And then when you come down to data series, it'll say Nexgen Dynamic Rinko. It'll say 13-2, and then I want to click tick replay because that's what gets me those synthetic fibs. So here's your settings for the large chart. And then just click OK. And it comes up. And it should have everything that you need. And then you can do the exact same thing for the small chart. Just build a small chart or a large chart, whichever one you built. Let me know if the reversal bar marker is on there. It should be. I'm not talking. It's giving you trouble. How so? Is it swearing at you? Is it shaking an angry fist? Smoking cigarettes outside of the drugstore? Says you have 2 already. I don't know what that means. You have 2 charts already? So Trina, the next step is get with Jason and tech. Let him fix it. Let him rebuild. Or if you are tech savvy and you're comfortable with it, it's not a difficult surgery, Trina. There's a section over here. Dun, 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 dun. Did I do the wrong one? There it is. Deleting old charts and templates and just starting fresh. If you're comfortable, it's not difficult. If you go step by step, it'll walk you through building brand new workspaces all the way down to doing it. And if you're not comfortable, though, please use Jason. Please use Jason. That's what he's here for, and he's really good. Sorry I couldn't be more helpful. All right, Nathan. How strong is this bottom? So Nathan, I want you to do me a favor. Your charts either squat or they don't, man. Oh, thanks, Trina. It's either a strong bottom or it's not. It's either a strong top or it's not. So I want you to learn this language. You ready, Nathan? If a no triggers through termination condition reverses the market, it's a strong top or a strong bottom. So in order for it to be a strong top or bottom, first it has to be a termination. Price reaches Fibonacci support. None of the triggers break. And then the large triggers go from red to green. That's your reversal. So what do you think, Nathan? Strong top or strong bottom? Perfect. And there's no level of strong or weak. It either is or it is not. And here, it absolutely is. Nicely done. So from your strong bottom, you get odds favorable momentum. You say small trigs way past the area. Absolutely. How many of your large triggers got through those one-to-ones? I see a big goose egg. So I've got 2 triggers through, right? What does that mean? That means that it's got potential to break, but it's not my best potential look. I'm going to perk up my ears and get my management hat on. Are you with me for that? Because it's only 2 triggers, it's not the best look. So let's go to the small chart. What's the biggest killer of the potential to break? Divergence. Oh, something to look for. And now, your entry, Nathan, respectfully, is the oh shit, it's going without me entry. It's the it didn't make it to the area inside of triggers. Oh, exactly. It's the cover your eyes, I hope it doesn't go. So what happened is exactly what happens. They went down to the better spot and you get stopped out. Why did you get stopped out? Well, because they pushed it lower. That's the real answer. But the reality is you only had 2 triggers through. You did have divergence, which is a loss of momentum. And then, Nathan, you're trying to trade the NASDAQ. And the NASDAQ is a colossal pain in the ass. And there's some things that don't follow the same rules. Well, it's the same rules, but it's not the same concept. Your large chart is a 34.5. Your small chart is a 13.2. And a 13.2 is the big chart on any other market. Does that make sense, Nathan? What does that mean? Nathan, are you going long against these small triggers on a large chart? Are you going long against that look on a large chart, right? You're not going to fight that. Hell no. You know better. It's the same thing, my friend. So these 13.2 triggers, as they did here, can behave as resistance. So when you're trading the NASDAQ, you ready? I'm about to give you the keys to the kingdom on the NASDAQ, Nathan. If you get to your area for entry and those small triggers are coming against you strong, a close on the correct side of the small triggers, the weak side of the triggers, as long as the large chart is good, that's your entry. And then it gives you time to manage. And look at this. When these small triggers are up, they act as support, they act as support, they act as support. So again, I know you're going to be looking in here studying the gap theory, but check it out. There's 2 NASDAQ entries. If I get to my area for entry and the small triggers are too close, not a full bar away, I wait for the close on the correct side. That looks exactly like your trade, doesn't it? That looks exactly like your trade. But if I get a pull back to my area inside of triggers and my small triggers are above my reversal bar marker and they're way off in the distance, Nathan, I'll take that entry from the area and I'll manage when I get to those triggers. So that's right there in the spreadsheet for you. And that little lesson, and I blew out, kid you not, I probably blew out 12 or 13 accounts when I started trading the NASDAQ because I had to learn that lesson and I hadn't learned it yet. And my brother is a get in at the area guy. He loves it. He says, F it, I'm getting in. I'm a giant sissy. I like safety. That's just me. We have different trading personalities. And that's how I discovered this pattern. And then I just dropped the spreadsheet in there. So not the best look, but a really good look. Starting to not be quite as good, but the small triggers on this one, I think, were the patience piece. And if you got in down here, you had some time to get in and manage the trade. You're welcome. And I say this all the time. Guys, there are no mistakes you can make that I probably haven't found a fix for. There's no mistakes you can make that I haven't probably already made. And if you have the courage to post in my room, we'll fix what ails you. Counter trend trade, strong top here, weak top here. You tried the momentum entry on the way down, just didn't work. And then when all the divergences print, you like 1, 2, 3, 4, right at a fib. This fib's not going to break. Well, shoot, my smalls are above the large. I've got momentum. Let's ride it up. Great recovery, Pete. Guys, when your 50-50 fails, that's a kind of a nice little apology. Well done. Are you guys learning? When you get into the room, we're so wound up about winning that we forget to learn. But what happens is through that repetition, through the conversations, through doing the same thing over and over, guys, we start chipping away at the things that create problems for us. So there was your gap theory, and it closed the gap. 50-50 failed. Gap theory did close the gap and finish the move down to trouble. And now let's see what we have. Why do you call that a good bottom? So let's cover this one. Cam, was it a termination that reversed the market? It was. You had divergence. That's hard to see because it's brown. So termination reverses the market, creates odds favorable momentum. Yeah, double divergence isn't a strong bottom. Termination that reverses the market is a strong bottom. Language is important. All the momentum, potential to break. High probability trend trade, absolutely not. Did you have a clear path? You didn't have a clear path, right, Cam? Because it was only the potential to break. Is that fair? It's only the potential. But let's go do the whole thing, Cam. First, it's a termination. Then it's a reversal. There's your strong bottom, rule number 1. Then it is potential to break. It's got to have the potential to break with momentum. Covered that one. Strong triggers on the small chart. No divergence. Perfect pullback to the area inside of triggers. Cam, this is about as sexy a 50-50 as you could get. The only thing that would have made it better is 3 triggers through. Beautiful. 50-50 is medium probability. Why? Because you don't have a clear path yet. That's it. It just means if something changes on my small chart, I will manage. Why do we take it from a strong bottom? Because these areas are more likely to break with a strong bottom. Does that make sense? You just didn't catch it. That was nice. That was a beautiful trade. But after a couple losses, you start overthinking things. When you think you took the perfect trade and you didn't and you lose, it sets you back a little bit, right? When you know that you're not taking the perfect trade and you win, you're like, oh man, am I getting a little sideways? And then when it sets up beautifully, you second guess. I did. That's just me, guys. I'm giving you the Mark Novak autobiography. And when you hesitate, when the rules are met, you don't trust your rules yet. You're letting the 1 or 2 trades before it dictate how you're going to react in the moment. And that was the perfect trade. Cam, I love everything about this picture. And the work that you're putting into it is going to pay dividends. The time you're putting into annotation, the time you're putting into questions, you're doing great. It's amazing how not easy it is to see these trades and all the stuff is there. You're going to use KISS plan and use to do that. So how do we slow it down? How do you slow it down, Cam? Learn the pattern. And this is the client trade section. Learn the pattern. And and visually create the image of what it means to have the rules met, and the market will slow down, and you won't hesitate. But guys, that takes time. That takes repetition. And you're doing great, Cam. You're doing great. What you're seeing now are the outliers from the best of the best trade, where there's a lot of opportunity, but because you're still focused on the best of the best, you're going to miss them a little bit. So go back and re-annotate, right? Go back and say, this was the trade. That was the one. I've got this. Man, Cam, I still do homework every day. I haven't shown it in a while. Guys, my picture count is 17,483 pictures on my Snagit. 17,483. There's a reason the market is slow for me. There's a reason I know exactly what I'm going to do before I do it. And if you look at all of these, 90% of them are annotated. All right, Boaz. 3 triggers through. Divergence on the 50-50. You get the reversal bar. Beautiful entry, and it just doesn't work out. Just doesn't work out. And refresh your data over here, Boaz. Those triggers are super wonky. But it is potential to break from a strong top, all the momentum, 3 triggers through, perfect entry. And the only thing that I might say is once you got that reversal bar, 2 ticks above it, Boaz, you find yourself with 4 or 5 ticks risk on this trade because of your amazing entry. Oh, you did? Oh, you did. Nice. I thought it was up here. Just outstanding. They don't all work. They just don't all work. Great job. Man, you guys have been amazing. K-Oin or Coin with the tiger, the lion. Welcome to Nexgen. I see you in there. I saw you asking questions in the other room. Man, if there's anything I can do for anybody in this room, let me know. Morgan, it's good to have you back. If you have questions on the videos that you're watching, let me know. And guys, it all goes back to momentum, path, and entry. It all does. Momentum, path, and entry. Learn the basics and then start looking for more. And my gosh, make mistakes. Make mistakes and post them in the room. We'll get a fix for them. We really will. No doubt in my mind. So let me shut down today's video.